everyone. We are nice to meet all of you here. We are on Decentralized Finance Summit, Global Summit 2020. We clearly see and got that decentralization as phenomena comes to every aspect to our new digital life. Money as Bitcoin, programmable asset management called smart contracts on Ethereum, companies, DAOs, finance, DeFi, even TV, dTV on which we are broadcasting now. With huge respect to all the speakers going to talk on this summit, I welcome all the audience watching this event now on DeFi Global Summit, where we unite DeFi world.
Hi, everyone. Welcome back again to the Decentralized Global Summit. We're going to have 4 days of an amazing content with amazing speakers, and we're going to talk about topics that are so important in our industry today. As I've said before, the summit is 4 days, and we're going to have the first 2 days in English, and the second 2 days are going to be in the Russian language. We also have 2 closed events, and they are available to people who bought tickets called All-Inclusive. And you'll have the links available to you in the comment section. During those closed events, you will have access to speakers such as Tony Vase, Michael Matsumura, Flora San from Binance, Felix Mago, Maru Patel, Gyako Mizuko, and many, many more. And also we will have an after parties on that days. And that's not even it. You will have a lot more than just those events. You will have access to the videos, and you are automatically become a member of the community of DAO consensus and token holders, or should I say hodlers? Okay, are you ready? So we're kicking off our day, and we will Sergey will tell us who is gonna be speaking today.
Yes, and today is gonna speak. We're starting from Grigory Rybalchenko, then Cynthia Wu, Rachel Lin. We're going to have a panel discussion with Nate Hindman, George Sebastião, Sean Law, Jordan Lyle. Then we're going to Carl Chassé, panel discussion with Jack G, Mary Tillibut, Shen Hong, Gordon Einstein, Matthew Filestone, Steve Simakov. The next panel discussion going to be with Rico Pang, Oleg Ivanov, Grigory Rybalchenko, and Ilya Churakov with Dan Homenko.
The organizers of our summit is the business community that help you to adapt to the new world, coronavirus reality, and it's DAO Consensus. Please don't forget to enter the membership of the DAO Consensus, and you will be exposed to bonuses and conditions such as tokens, access to different communities of the summit, and educational academy, and many, many more.
For sure, we have co-organizers. It's Go Up Group. We have technical partner Platinum. We have general partner Pons. We have general media partner as Forklog, and special partners. There are TestaMax, DeFiRx, Neomax, Neuronix, dTV and ThinkTank community, Coinsbit, Coindar, Colibri Group, Zelwin, and Fido.
And it's actually not all. There are a lot more. In December, we will have the end of the year 2020 results. We will be talking about, it's going to be an event, and we're going to talk about what happened in 2020, probably going to take us a lot of time. And then we're going to talk about what we expect in 2021. And we're going to reward all the most popular members of our community. You have an exclusive access to be able to be the first one to register there. Our moderators are gonna make this link available in the comment section and in the different Telegram groups that you guys following.
Okay, and we are waiting for our first speaker, Grigory Rybalchenko.
работаю по всему миру. Разные языки, валюты, билеты, договоренности, задачи. И в один момент задумался, а можно сделать так, чтобы было минимум скуки, максимум драйва?
Люблю все контролировать, потому что несу ответственность за других и за себя.
У меня маленький бизнес, но большие заботы. Я не смогу учить других гармонии, если гармонии не будет во мне.
Раньше думал, что планировать это для старперов. Со временем понял, что это и есть свобода. Возможность устраивать жизнь как хочешь.
Grigory Rybalchenko is already with us. Grigory, nice to meet you here. You are the first person going to participate in this greatest event. The stage is yours. Go ahead.
Hi, Sergey. Thank you very much for asking to present. And today, I would like to talk about a really hot topic for many people, which is DAO. And the topic is true DAO, which is a new trend in DeFi. And while I was explaining what I mean by true DAO, I will give real examples. What is it and how it could work based on the Emiswap project. Let me move to the next slide. Okay, so before talking about this, I will give a couple of words about myself. I am more than 8 years in crypto, and also I call myself crypto business scientist because I'm trying to marry a crypto blockchain with a real business cases. And even I had this experience when I was working with Accenture, leading consulting companies. Then I launched several DeFi services, which is working now and quite popular, I would say. I graduated MBA and have a Harvard degree, so I know what is a business, and I try to make everything relevant to the real business. And I am a part of Emiswap team, which is developing a new true DAO. So when we talk about DAO and definition of DAO and its benefits, it is about automated decision making. It means that smart contract is making a decision, not people. There are predefined criteria. Then it is a community-based decision. So it's called decentralized because like people have rights based on amount of tokens or whatever, but they have rights to vote decentralized. And also the transparent decision making. Whatever is written on the blockchain, this is available for everyone. Let me quit something. Available for everything and traceable. Then, and this is like really cool concept. But today there are some issues with this concept, and the issues are if we look at current DeFi protocols, most of them they have smart contracts, which is changeable smart contracts. It means there is a proxy smart contracts and underlying smart contracts. So most of the protocols can change the logic of their decentralized solutions. And of course, it may be the good reason for it, but at the same time, this is a big issue in terms of security. Then there is a lack of profit share. If we take the most, I will not call them by names, but the most famous DEX or other protocols, all the profits goes to the pocket of the creators of that DEX or protocols. Then there is a lack of token vesting, so there is a big airdrops of tokens, And then we saw that how fast it grows, and then we saw how fast the tokens drops, and the drop is like can be 90-95%, which is not really stable and healthy situation. And the rest one is a lack of the governance token. So there are some protocols which are starting to implement it, but 99% of protocols have no governance token. It means the changes could be done not by decentralized community, but changes can be done by protocol itself. So that's why we decided to introduce EmiSwap. So EmiSwap is the first project of EmiDAO ecosystem. So EmiDAO ecosystem, we believe it is really decentralized autonomous organization, and it is open source decentralized, and it solves all the issues which I described on the previous slide. So if we look at the EmiDAO, so in green one, this is EmiDAO ecosystem. And the main components here are that it has EmiVault. You can see it on the right if I show with my mouse. And all the profits from all the protocols goes to this EmiVault. All the protocols, when I say all the protocols, you can see this is EmiSwap protocol. This is decentralized exchange, or AMM, autonomous market maker. And then there will be more protocols, lending protocols, staking protocols, and many more insurance protocol. There will be more protocols which will be connected to EmiDAO ecosystem. And the second main, and like all the profits goes to EmiVault, and this EmiVault, profits from EmiVault will go to ESV tokens holder. So the people who hold ESV token, they will own the whole ecosystem. They will be real owners, and it is really decentralized owners. And the second one beauty is governance smart contract. You can see it of voting. So any changes to EmiVault, to EmiDAO, to any other protocol, any changes to any smart contract will be able only if ESV tokens holders will vote for that. So that's why how it gives really true DAO, makes this true DAO ecosystem. Yeah, and we built main principles of decentralization. If I talked about EmiSwap, then there are EmiSwap itself. It is a fork of Mooniswap and Uniswap, because we took the best from Uniswap, we take the best from Mooniswap, and added something on top of that. Basically, the commissions will be the same as on the market. There is 0.3% of trading commission. 0.25 is redistributed among liquidity providers. And the beauty is that 0.05%, it will be distributed among ESV, its type of, among ESV token holders. So these commissions, these profits will go not to the owner of the protocol who created the protocol, but the owners of the ESV, which is truly cool. So then, to repeat, ESV token will give right for decision maker. Only token holders will make decision, and profit share. All the profit will go to ESV token holders. And we did some profitability model and assumption. And this assumption shows that if the daily volume of the token holders will be 1 million per day, then the cumulative growth, or I would say cumulative profit will be 1.44%. But then we have 3 months, and the profit and the volumes will be growing. And when we achieve the volume of 230 millions per day, then the profit for those who start or buy tokens now will be 3,000%. And this is quite conservative, because if we take the volume of Uniswap today, this is about 400 million. So this is 1.5 times in 24 months less than Uniswap is now. So we think it is very, very conservative. And there are several ways, because we saw that it is decentralized and it belongs to the community. That's why there are a lot of ways, even now, these days, to get tokens. And this is become, this is 24.2% for ecosystem growth and users attraction. This is crowd sales participants, those who don't want to do anything for the ecosystem, but just want to buy tokens. 5% for advisors and ambassadors, and 3% for early liquidity providers, which is 30 days time frame will be. And I will go in details to give a little bit more details. So for those who want to get 20% or 40 million of ESV, they can buy, and there is a current price of 11 cents, but we remember that this price will be growing, and this will be growing within the market. So this is initial price, but then it will be growing. Then there is a swappers and liquidity providers. For 30 days, initial days, there will be 40,000 ESV tokens distributed per day. And for the rest 90 days, not for the rest, from the first 90 days, there will be 10x reward for liquidity providers. It means that there were 30,000 ESV will be giving for 1 million of turnover of the exchange. At the same time, after these 90 days, it will be only 3,000. And the same, there are extra 10 days for the swappers. And the most interesting one for those who wants to be part of the team, there is a 5% or 10 million tokens for ambassador. So if you are community builder, if you are influence marketologist, if you ambassador, or you like investor relationship in investor relationship arena, you can write to ambassadors at amyswap.com and propose to become part of the team, and you get the reward of amyswap token, which is token for really true DAO. So again, thank you for the attention. I am co-founder and CEO of AmyRex, and at the same time team member of AmySwap. I think this is a type of AmyRex.
Thank you, Grigory, for your interesting topic. Yes, we now have new kind of definition called true DAO, and now we're going forward. Catherine?
Our next speaker has actually a very interesting topic. She's going to talk about earning attractive yields in the world of negative interest rate, which I'm personally very interested into. But we will need a couple of minutes to get everything ready. We will be back in a couple of minutes.
Работаю по всему миру. Разные языки, валюты, билеты, договоренности, задачи. И в один момент задумался, а можно сделать так, чтобы было минимум скуки, максимум драйва.
Люблю все контролировать. потому что несу ответственность за других и за себя.
У меня маленький бизнес, но большие заботы. Я не смогу учить других гармонии, если гармонии не будет во мне.
Раньше думал, что планировать это для старперов. Со временем понял, что это и есть свобода. Возможность устраивать жизнь как хочешь.
Чем больше непредсказуемости, импровизации, тем глубже я дышу.
Когда весь мир крутится вокруг, очень важно найти равновесие, как в танце. Открывай новое, исследуй, планируй, зарабатывай, твори гармонию.
Понс. Целый мир в пару кликов.
Let me know when.
Hi, everyone. Welcome back. We have Cynthia Wu with us. She is the head of business development and sales at Custody Metrics Point, and she's going to talk about earning attractive yields in the world of negative interest rates. So I suggest you take notes and listen to her very attentively. Hi, Cynthia. Welcome. Thanks for being here.
Thank you, Catherine. Thanks for having me. It's a great honor to be here today. Yeah, I think this topic is especially relevant for this year with unlimited money printing around the globe under the backdrop of a global pandemic. So it's definitely quite relevant for everyone that want to keep your wealth. So a little bit about us. So Matrixport, we are spin off from Bitmain last year, and what we provide is one-stop crypto financial services from custody, trading, investment product, and lending and borrowing. So what we want to do is basically make crypto easy for everyone. I think that's relevant to today's topic as well. So let's look at two charts. The first chart, it is monetary policy interest rate. As you can see that a few countries, actually not only countries, also regions, right? You see the Eurozone there. Actually, their monetary policy made their central bank is paying negative interest. It's below like 0% to the banks. So as a result, bank is also paying negative or zero interest to the depositors. So this is a very shocking sort of a scenario, because you are not, when you deposit your money into your bank, you used to earn a lot of interest, but now you don't, right? So basically all the lenders are taxed. And is that necessarily a good thing for the borrower? Not really, because the bank, they are quite reluctant to pass on negative yield to negative interest to their end consumers. So instead, they actually are taking a loss in between. Basically, that eats into their profit margin. So up to certain points, the bank will be reluctant to take in new deposits. So even if you want to put money into the bank, you not necessarily accept it. They don't necessarily accept the money, and they're making less loans. So as a result, the economic activity are not necessarily stimulated by having a negative or low interest. So that's a big problem. And let's look at the bond market. Bond market is where you lend the money to a certain company, right? And the company or the government pay you a yield, right? So if you look at the chart, you can see the negative yield bond is actually picking up a lot to more than like $17 trillion. That's a lot, right? So instead of so if you're lending, for example, if you're lending like money to the European, a lot of European governments for 10 years, what they're paying you is negative. And that's not only government bonds, almost like 1 trillion of corporate bonds is also like negative. So that's quite weird, right? It's very very unusual, because I mean, normally you should get paid because you are taking the counterparty risk of trusting a business, but now instead it's a reverse. So what should we do, right? I think the solution is quite obvious. Like last month in Hong Kong, this is a real picture in Hong Kong, where opposite to the global headquarters of HSBC Bank, there is a community-sponsored advertisement, which is about Bitcoin. So there's the three reasons that it could help the world to solve some of the most daunting problem. So let's look at the three reasons. The first reason Bitcoin exists because there's more US dollar have been printed in 2020 than it was existing in 2009, right? And also because it's scarce, it's divisible, transferable, it's better than gold than being gold than gold. And also it's represent a new technology where you don't want to not be part of it. And if you look at the crypto, like CMC, you can see that the top coins should represent the economic weighting in the cryptocurrency world. Currently, we have a market share, global crypto market share of 364 billion, out of which Bitcoin is still a majority of it. Is more than I think 65% is still Bitcoin. You see Binance there as well. It's one representation of the central, like SenFi, where it's moving up to top 10. And you also, interestingly, you see Link there. That's probably the first decentralized economy token that has been made to top 10. I think in the future with DeFi prosper, there would be a more representation of top coins that representing the governance coins in the DeFi world. And I want to put things into perspective, right? Where are we now? We are in the right corner, right bottom corner, where you can see that the Bitcoin is only like 212 billion. That's a fraction of gold market. That's not yet JP Morgan, and that's a fraction of a lot of other like tier 1 banks. But tier 1 companies, many technology companies. But I think that might be changing, because if you look at David Schwab retirement account, where you see how people put their retirement money investment into different stocks, you can see that the baby boomers, most of them put into like the Apple, Amazon, Berkshire Hathaway, Microsoft. But if you look at the millennials, which are probably our age, like 25 to 39, the fifth is already Grayscale Bitcoin Trust. Like people put in money in their retirement account into companies or business that they think will exist for and preserve value. So I think with millennials changing their behavior into investment, that's a strong indication of people are trying to hold their personal wealth, preserve their personal wealth in a slightly different way than the previous generations. So I think that's the same thing reflect in DeFi. We have all seen this DeFi boom since June, which ballooned the whole total value locked from 1 billion very quickly to today's 11 billion. And we also have seen different businesses in DeFi have seen some initial success. Like there is decentralized lending, basically trying to represent banks in the real world. There is decentralized exchange, which trying to take business from a centralized exchange. And we have seen derivatives exchange as well. We have seen wrapped assets like the WBTC and some others, right? We have seen synthetic assets, which represent digital assets and also representation of the price of other assets, for example, crude oil or gold, right? Which is already coming out from the narrow definition of cryptocurrency. When we have seen the emergence of the decentralized insurance. So I think this, although this is at the very early stage, but we start to see that the landscape have been coming together in the past few months. We have seen experiments in all these different segments of the financial activities. We don't know who is going to be the end user in 2-3 years time, but I'm sure in each of the segments there will be champions. So I don't think I have much time. So this is my last slide. So what you can do by earning on Matrix Port. So what kind of earning product we have to help you to preserve your wealth? There are a couple of categories. So the safest one definitely is the most predictable one, the fixed income product, where you can earn a very stable 6 to 8% annualized yield on stable coins and also major coins, BTC, ETH. And there are also structured product like dual currency investment and also shark fin product, which is going to give you a much higher upside. It's ranging from like 7 to 70% annualized, and also from for shark fin, it gives you a guaranteed 3%, but with potential if the price moves within certain boundary during the period of your investment, you actually can get up to like 20 to 25% annualized yield on your BTC. And also, Matrix Port, even though it's centralized platform, but it provides you one-click easy access into DeFi yield, which we have currently connected with Compound, Curve, and YFV and Flamingo. We try to aggregate all the funds, and also these people share the gas fee, and we will handle all the execution for you, so that you only need to enjoy the yield. And we also have some upcoming yield product, which provides you a double-digit yield as well. So stay tuned. If you're interested, do download our app or get in touch with me. I'm happy to discuss more with you on how to generate more yield on your cryptocurrency and how to preserve your wealth in this difficult world. All right.
Yeah, thank you so much for your presentation. It was very informative. I actually took down several notes. But before you go, and we're going to talk with your colleague, I have a question to you. According to that Charles Schwab slide that you showed us, Bitcoin and cryptocurrency is still top 5, right? So we're not the first, but we're top 5 investment choices, I think, among millennials. So my question is, how do you think the crypto industry can get from number 5 to sort of overthrow Amazon and become number 1, and if it's actually possible?
Yeah, I think we just need to wait. I mean, I'm sure it's definitely going to climb the ladder into the top 3 in the next couple of years, especially I think this year, it's a deja vu of what happened when Bitcoin was first invented, right? I mean, if you look at this, if you look at the what was written in the Genesis blog, where that is the Times, the quote in time, the article in Times in January 2009. So what happened in that year with all the government bailing out the banks and also printing money is happening again in greater scale this year. So I think the human nature is not going to be changing, and this is we have not really seen a real solution in the existing financial industry, or the governance, or the regulators. So it's going to go down that route. So with people realize that this is happening again and it's never going to have a real solution, people will tend to look for alternatives. And I think we already have a lot of more people, like 30-40 million people, which realize that Bitcoin could be the other alternative than 12 years ago. So I think given time, I think our the younger generation is definitely feel Bitcoin is much more relevant for them than gold. So they will start to move some of their asset into this asset class. So I'm quite confident.
So we're aiming at top 3 in the next couple of years. Hopefully, Cynthia, thank you so much for your presentation. Thank you, Catherine. We'll be back in 2 minutes with Rachel talking about the DeFi market.
Great. Thank you.
Работаю по всему миру. Разные языки, валюты, билеты, договоренности, задачи. И в один момент задумался. А можно сделать так, чтобы было минимум скуки, максимум драйва?
Люблю все контролировать, потому что несу ответственность за других и за себя.
У меня маленький бизнес, но большие заботы. Я не смогу учить других гармонии, если гармонии не будет во мне.
Раньше думал, что планировать это для старперов. Со временем понял, что это и есть свобода. Возможность устраивать жизнь как хочешь.
Чем больше непредсказуемости, импровизации, тем глубже я дышу.
Когда весь мир крутится вокруг, очень важно найти равновесие, как в танце. Открывай новое, исследуй, планируй, зарабатывай, твори гармонию.
Понс. Целый мир в пару кликов.
Welcome back. Our next speaker is Rachel Lin. She's the Vice President of Lending and DeFi at Matrixport, and she's going to be talking about one of the hottest topics today is the DeFi market. She's going to talk about the market status, what's now and what's next, right? Rachel, hi. Thank you for being here.
Hi, everyone. Hi.
So,
Thanks for the time.
We're very excited to hear about what's going on and what's going to happen with the DeFi market. Tell us all about it.
Sure. Thanks for the opportunity to talk to everyone here. My name is Rachel, so currently heading the lending and DeFi products within Matrixport. A little bit of my background. I was actually from traditional finance. So today I would love to talk a little bit more on why I think DeFi could be, of great advantage over traditional finance. As we all know, DeFi right now, the yield farming create the very active yield farming activities that starting from the compound token issue has cooled down a little bit. Yield has goes down, but I would say that this is just the beginning for DeFi. DeFi, if you look at all those tokens market cap, it added up actually no more than a single XRP's market cap. There's still way more room to go given the diversity and the true value added it had for the whole community and the financial systems as a whole. But what is the next steps for DeFi, or what could be the next big thing for the DeFi market? From the traditional finance experience as well as what the current market status are, I would say that there are three areas that everyone could watch. Number one is, of course, derivatives. Derivative is I think traditionally much larger market than the spot market. If we look at Uniswap, right now a single spot exchanges, it has been like the trading volume has accumulated to 200 to 400 million per day, but that's only spot market. Derivatives could have like 10 times the market's trading volume than the spot market. And there could be lots of innovative ideas, including those futures, options, and structured products that could come along together. But the market is at its preliminary stage, and derivatives is definitely something that you would love to watch for. The other thing I would call is synthetic assets. We know that there's these synthetics projects out there, but it is only a projects with limited synthetic asset right now. As well, that there are lots of cross-chain asset that could actually be added into the right now Ethereum's DeFi their ecosystems. Where the derivatives coming, more synthetic assets could be created and traded on their DeFi space. That's something that you might like to pay attention to. And the third thing I call it aggregators. It's not only the aggregators that we're all familiar with, like 1inch and all those aggregators to that could help you seek the bank's pricing for spot exchange only. By saying aggregators, I would say that it's not only the trading aggregators, but say the yield farming aggregators, wealth management aggregators, lending protocol, etc. And if it is sort of like in the higher dimensions than the single trading or investments products, it could come at a form of a wallet, or it could come at a form as a very simple to use aggregators. So there's lots of room for these areas. And we are keen to see if there's more innovative ideas that could be coming up. So that's the three areas that I would like to also share with you that we will be excited to see the development. And lastly, as I just now talk about, I came from traditional finance. I was initially working for investment bank, Deutsche Bank, for its derivatives sales and trading, and later with N Financial for its blockchain for cross-border remittance business. When I compare DeFi to the traditional, no matter banking business or the fintech business, there are definitely lots of room that lots of features that DeFi could be of advantage over CeFi. In the short term, always regulation friendly. You have the permissionless access and token listing. In the longer terms, I think that DeFi has been choosing a path that is smart and opens to all. So with its openness, lots of creative idea could be built simply on top of other people's work, and everyone could focus on something that's really innovative and with a very small team. And lastly, what DeFi has been offering to the world is really trustless finance. So what is transparency and traceability, it's community supervisions. And I think like right now is the golden time for lots of innovative entrepreneurs and passionists in DeFi, because with these trustless functions, everyone trusts in code, but not trust in the size of a small team, and then you could earn lots of support from the community. That's something that's I think like we never seen in the traditional finance space. And with that, we think that's no matter how DeFi goes at itself, for sure in the future it will bring lots of shed a lot of light in what true finance should be to the whole traditional finance world. So that's my sharing. Thanks very much, and I look forward to communicate more with you. Just contact us at Matrix Port.
Thank you so much, Rachel. One question though, you've mentioned derivatives, right, and synthetic assets and aggregators.
Yes.
And as much as this is a very popular topic in the crypto space, how do you think this, this sort of developments of DeFi might or might not attract interest from the traditional banking system? Because what we see right now is the lack of trust, because as much as it is good to be decentralized, it sort of creates mistrust from the traditional financial system. So how do you think that will play out?
Yeah, in my opinions, number one, right now it is not the time for large-scale traditional finance trust into DeFi. As just now saying, it's relatively small, and I would say that from the traditional finance world, they are watching, and it's sort of like let this field as the experiments field first to see how things would go, because DeFi in itself is very new. For a large traditional finance institute to adopt a model, it needs a very lengthy process. So I think DeFi is still very young. And all the troubles, as I understand from, I mean, even right now, the traditional finance friends, everyone thinks that anything new could cause let's say bubble, or could lead to some sort of like safety issues. But this is how new things were born, and this is how a revolutionary technology would born at first and came into mature and shape the world in the future. Yeah.
Thank you. Thank you so much for your thoughts and for sharing them with us. And we're going to have a panel talking again about DeFi in a couple of minutes, so stay tuned.
Thank you.
Ladies and gentlemen, we are on Decentralized Global Finance called DeFi, and we have the first panel today. And I'm honored to introduce our panelists. They are Nati Hindman, head of the Growth Bancor Protocol, George Sebastião, CISSP CTO advisor speaker, and Sean Law, HBTC head of Russia and CIS. First of all, yes, I would like to introduce yourself, guys, and then we go to the discussion. I'd like to start from you, Sean. It will be best to talk from your side. Just we don't hear you. Turn on your mic.
Yep. Hi, everyone. I'm Sean here. Well, I'm representing HBTC Exchange. I'm the head of Russia and CIS. So, we are a crypto exchange backed by investors like Huobi and OKX and a number of traditional finance. Yep.
Okay, good. Nati, you're next.
Yeah, so it's Nate, although I kind of like Nati, so maybe let's just go with that for now. I work at Bancor Protocol, which is a decentralized exchange based on automated market makers. And that means anyone can contribute liquidity to the exchange. Everyday token holders can, take a share of each one of the trades that happens on the system. Bancor has been around since about 2017 and was, some would say, the first DeFi protocol to be launched.
Okay, perfect, Nate. Noted. Then George Sebastião.
Yes, good afternoon. It's a pleasure to be here. I'm George Sebastião. Been in this business for about 35 years in IT, but in blockchain 6 years. I am CEO of the GBO, Global Blockchain Organization, founded in Oslo, part of ADO, Alternative Development Organization. I do manage and help manage the cybersecurity of a centralized exchange known as Palmex, regulated in Bahrain. At the same time, I am also in the process of launching a DeFi or DeFi-X decentralized exchange out of Singapore, October 25th. So it's interesting times.
Perfect. Guys, today's topics is going to be about centralized exchange vs decentralized exchange. We see that all the globe is gaining somehow overhyped about DeFi, and all this liquidity, all this money goes from centralized exchange to decentralized one. First of all, I would like to hear your opinion about this phenomena, but I think it will be good, much more better to ask Catherine Ross, because she is also with us here, my co-host. Catherine, maybe a couple words about what do you think about decentralized addiction and centralized exchanges, and what's your thoughts about this all?
That's a bummer. As a journalist, I'm not allowed to speak my mind. But I do remember Vitalik Buterin once told at a TechCrunch conference back in 2018 that centralized exchanges should burn in hell. It's just a reminder of like a popular opinion. I just think that as long as we protect the users, that's all that matters in the user's assets, because if it's a decentralized exchange and the assets are hacked and the accounts are hacked, there's nothing we can do. Whereas if it's a centralized exchange, it has a lot of governance from a company side, so it's a little bit controversial. And yeah, I think this is pretty much it. I cannot say any more as a journalist, but I'd love to hear what you guys think.
Okay, Nate, maybe some comments from your side, because I see you are from the Bancor protocol. It's protocol which are making swapping between assets. Am I right, or something wrong?
Yeah, exactly. You can swap any asset instantly. We don't use order books. Most exchanges use order books, where it requires a counterparty on the other side of a trade. The trades that happen on Bancor are kind of trading against code, so trading against a smart contract. So the smart contract holds two reserves of a currency, and you can buy and sell, and they just manage in a network that you can submit any currency and then pull anyone out. That generates a fee for the users who are providing liquidity to these pools. We call them automated market maker pools, and they generate a fee. It's not the network that takes the fee, but it's the liquidity providers. Now, to get back to your question about what's behind this sort of flood of liquidity in DeFi, I think what we sort of saw is all these sort of non-DeFi crypto asset traders looking at DeFi tokens and seeing them mooning. There was just all of this, they weren't getting crazy returns on their Bitcoin yet. Or it was another asset, and they're seeing like 10, 20, 30% growth in a day on some of these DeFi assets, these sort of new networks. And what happened is they bought the token and then they sort of stuck around for the services, because they realized it's not just buying the token, but you can sort of lock a token in one of these networks and generate yield on it. And that was the emergence of yield farming, or yield hopping, where all of a sudden you saw this flood of sort of these people who had bought L1 tokens in the past. All of a sudden they were utilizing these sort of DeFi services to generate crazy APY, annual percentage yield, in one day. And I think that's what's created the flood of activity on DeFi. Is it's really greed at the end of the day, getting crazy returns in a short period of time. And that's what really sort of set the whole thing off.
Perfect. I got your point. Yes, Sean, am I heard right? You are working with two exchanges, with the biggest exchanges in China, with OKEX and with Huobi, and how that exchanges treats this phenomena, which just goes from centralized exchanges to decentralized one. Just very interesting, your thoughts about this.
Well, sorry to correct you. I'm not working with OKX or Huobi. I mean, we are invested by these two giants. So, well, what I see for this high influx of funds going to DeFi is, I think, as what Nate mentioned, I mean, it's really hyped by the people that think that there's a lot of revenue to be generated through logging in of their tokens to gain the APYU. And it's very attractive as compared to what the financial market actually giving out right now. It's crazy, right? I mean, we're seeing negative interest rates in the banks, but now people are seeing more than 20 to 30%, even 100% returns in APY. So this is one traction that from the centralized exchange to the decentralized exchange. But of course, there's two sides to it, because for people who trust the platform, I mean, somewhat people, there's two sides to it. For centralized exchange, user trusts the people and the organization running it. But for a decentralized exchange, the user trusts the coding. They trust the smart contract works perfectly and nothing will go wrong. It's a technology-based trust. So it's two different kind of client set, I would say.
Okay, good. George, maybe your opinion, how to deal with all of this? People want to trust or not trust people, and other people, I'm talking about programists, about engaging to IT, all of them trust only to code. How to deal with all of this with big money like in Dubai? George, you are muted, please.
I apologize, all this technology. Actually, it's a very simple and very complicated all at the same time. It's a bit like the Matrix. We have the choice of the blue pill or the red pill. Another one is actually a good pill, because at the end of the day, neither one is providing a perfect solution. If we look at CeFi, which in the case of Palmex, centralized, regulated in Bahrain, there's an order book, it has a modern platform, it is regulated by the central bank, you have full KYC, you have source of funds, it protects the assets of the user, cold wallets, warm wallets. So it's a very structured approach towards investing. So it's a low risk approach towards dealing with crypto and blockchain. And it has the capability of exchanging between crypto and fiat and vice versa. Then we have the world of DeFi, which is kind of the new wild, wild west. I mean, we always like the new frontier with lots of flexibility, no KYC, capability to own your own assets. If you lose, you lose, because at the end of the day, you're responsible for your own keys. But at the same time, although you have more risk, you have also much more flexibility in gaining gains. So the gains are not just in the 10%, they can be in the 1,000% or more. And many people like this challenge. So the question is, what is your risk appetite? So if you're a conservative guy, maybe go for the blue pill. If you're the aggressive guy, go for the red pill and enjoy the ride.
Okay, yes, perfect. Very interesting. Yes, I love your point. Nate, please give me some advice. When Bancor protocol gets get exploited, get released. No one even heard about DeFi, really. And its new approach to swapping something, to being not concerned to the exchanges as is. Is it somehow changes in this new phenomena, in this new decentralized world, or not? Just will be very interesting what's going on inside of Bancor.
So just to make sure I understand your question, you're asking specifically what has changed?
Yes, what is changed starting from 2017 when Bancor appears, because it's not appears as DeFi protocol, it appears as swapping platform, and now maybe something changed in this moment because all this stuff has happened.
Yeah, so I think you hit it right on the head, which is that crypto was very interested in the trader's experience for a while. What's going to provide the most secure experience, the smoothest experience for a trader, with the least cost for a trader. So everyone was like, how do we make the best trading platform? Where I think things have shifted in the industry is it's now, how do we make the best platform for liquidity providers, for people that own the asset, it's in their wallet, they don't necessarily want to, they believe in the project, they don't necessarily want to transfer it in and out, but they want to put it into some sort of investment vehicle that's generating passive income or passive yield. And so I would say that the user behavior and the use case that a lot of builders and protocols are building for is how do we give the best experience and the best returns and the safest experience to people who want to put their assets on the line and put them to work, not necessarily constantly trading them.
Thank you, Nate. Guys, as I believe that 2 years ago, 3 years ago, all of us want to create liquidity by printing or by creating tokens. Unfortunately, now what we have on market, we have that liquidity based on stable coins, based on USDT, based on DAI, based on USDC, all of them. Also, we have CDBC, we have crypto yuan as well. The question to you, Sean, how exchanges treat that new phenomena, that new thing, new kind of liquidity? Are there all of them by default accept this DeFi world, what we see for now, or they are going on that way? We're talking about new kind of features. Just your comment. Sean, you're muted.
So I don't really get your question. Do you mean that how centralized exchange?
Yes, how these centralized exchanges, we're talking like OKX or Huobi, you are truly know about how that looks like inside, how new features appears or disappears somehow in this new world, because something changed, something changed inside. 2 years ago, it's another kind of situation. Now it's changed dramatically.
Mm-hmm. Well, I mean, we do recognize that there's a shift in the client preferences. They want somehow of having a safer investment vehicle, like what we have in the bank is we call it fixed deposit, a time deposit. So in this case, I mean, for exchanges, for HBDC, we also adopted something similar, asset management model, whereby we allow, we take the risk, or we take more of the work to help users put their money in or assets in liquidity provider. For instance, in the more recent one we did with the UniFi protocol, right? So we did a 14 days DeFi yielding based on our platform. So we collect USDT and ETHs from our users. So we put them in as a pool to stake it in. So this is what we've been providing to our users for the last 2-3 weeks. So this is something we try to integrate with times.
Yeah, and I just want to interrupt there because there's a lot of ideas that there's like this dichotomy where you're like a sex or a dex and you have to choose one direction to go into. And I think it's more of like that these worlds are blending and that centralized exchanges are giving users exposure to these decentralized liquidity pools or other staking products. And the users, because there's a fiat on and off ramp, because it feels like a more secure environment, they're able to get exposure to these types of, liquidity pools or yield instruments. So I think it's more of like a blending of the worlds that we'll see.
Yeah,
yes,
I do agree.
yes, I do believe that the word, as we know, in the way forward, is probably going to be an hybrid world in which both DeFi and CeFi will actually cooperate together. Because CeFi, because it's 100% virtual, it will not work in modern world as we know it today, because it will not address the issue of fiat currency. Only CeFi can address that. So you actually need the combination of both to actually address every business requirement that exists. But each one has got pluses that you need to take or can take advantage of. The CeFi gives you the stability, the recoverability, but the CeFi gives you the capability of much higher returns, flexibility, and the user is in control, not a specific entity. It's the code. But one thing we should know about the code, being a cybersecurity background, every 1,000 lines of code has got a bug. Every 10,000 lines has got a critical code. So DeFi is only going to be secure and will protect the assets of the DeFi users if proper audits are done on the code. And we have discovered already many times that these vulnerabilities have created some projects to disappear almost overnight. So as DeFi matures and DeFi gets better code, I think DeFi will give us a much better return over time.
Good. Catherine, I want to invite you on this discussion. I noted that you can't commit something, but you can ask for something. Maybe you have a question to our panelists.
I actually do have a couple of them. So the first one is, and actually this one maybe to Nate first. You said that you might be the first exchange working on a decentralized protocol, right? I believe that was the definition that you've used. So
I said, yeah, that we were the first decentralized finance protocol.
Thank you. So I'm interested in, is there any legal uncertainty or maybe difficulty into switching to that sort of definition? And if there's any like legal work that you have to put in to sort of build something like that?
So specifically, so what's your question about the legal component, like the legal nuances of being a decentralized finance protocol?
Is it actually legal to just switch like that and to become a platform that offers that sort of, tools? So is it, first of all, legal? If it is legal, is there any like legal ramifications that you have as a company?
Are there any, well, I think being in crypto by nature, there's legal ramifications for everything.
Yeah.
If your question is what we're doing is illegal, I'd say no, resoundingly. So that answers that. To address the sort of legal question and really what's evolving in DeFi and why regulators are understand the importance of it, and we do work actively with regulators, is that there's no centralized owner of these protocols. That there's this idea of progressive decentralization where you don't want to release something on day one that's fully decentralized because it can potentially just get hacked to bits. Tons of people, like you said, there's always bugs. They say that people love decentralization when everything's going well, but the second something goes wrong, they want centralization. Like, how do I get my money back? How do you shut this off? How do you shut off this contract? So there's a sense that we're on this path to decentralization where you start with potentially some centralized components as emergency breaks that distributed group of nodes can potentially activate. And the end goal is, full immutability, that no one can change, that no one can control. I would say the big evolution in probably the past 6 months to a year is the infrastructure for DAOs or decentralized autonomous organizations has really started to improve. There's a lot more experimentation and a lot more innovation on that front that's actually allowing decentralized protocols to have fully functioning DAOs where the holders of your protocol token or your liquidity providers can issue and control upgrades to the protocol, whether that's your next new cool feature that is integrated, or whether that's to shut down the system in the event of some sort of vulnerability. So there's a shift towards full ownership by the community, by your token holders, by the liquidity providers. And I think that is helping with the regulation side, where the regulators are like, no one owns this. So it's not necessarily an exchange in the common sense, because there's not a centralized party that's running it or can run it, really.
That's a very interesting point. If no one is running, then basically it's not an exchange. So maybe there is a way to sort of define differently. My next question is actually to every one of you, because I didn't get your personal views on whether you prefer your assets to be stored on centralized exchange or on decentralized exchange. I'm not sure if you're allowed to speak on that, but if you are, what is your preferences there? Sean, can you speak on this, please?
Well, for me, I have no preferences on centralized or decentralization, because in the first place, blockchain is built for trustless, right? So for myself, I mean, I do have some assets in decentralized protocol, and I do have some asset in centralized exchange. So I'm pretty much of a diversified portfolio. I mean, there's always risk. I mean, this is what our users always see. There's risk in both protocols, whether it's centralized or decentralized. Well, for centralized risk, I would say there's a lot more, maybe due to the more recent hacking cases of the exchanges. I think this is pretty common, right? We heard from the Mount God all the way to the more recent one, not to name them. There's something that everyone's going to be very cautious of. And of course, we will get more support from centralized exchange. This is something like a typical user would like to have when something bad happened, or I want to get out of a situation quick. I can reach out to the customer support. But for a decentralized protocol, it might be a bit tougher for me, because everything is coded, and who can I speak to? Most probably will be the communities. So these are the people that can help me, advise me on what I can do to get out of these situations. So I would say I'm pretty neutral to whether centralized or decentralized. I'm a user of both.
Okay.
My views are a little bit slightly different. The first thing, exchanges are not stores or wallets, although people do like to sometimes store their assets in exchanges. Unless the exchanges have proper cold wallets and custodianship, whether centralized or decentralized, there's a chance of they getting hacked and you completely lose your entire funds. So to make another approach is that I believe that you should keep 80% of your funds in cold wallets that belong to you, nobody else, number one. You should use centralized exchanges for certain types of operations that make sense. And 20% where you want to have extra risk and much higher gains, then use decentralized exchanges. Stake your tokens and benefit from the high potential gains. So I believe that the 80-20 rule plays an extremely important way forward, because with this 20%, you can make the next 2,000%. But putting 100% of your eggs in one single basket is definitely not the way forward.
Yeah.
Well, that's a very refreshing approach. And it does, diversifying your assets. So sorry, Nate, go on.
Well, I just wanted to say, I would definitely agree with that, to not think of exchanges as storage. When you want to store something, put it in a cold storage wallet. I think that's always the best. When you want to trade something, then keep it on the exchange just to trade, and then put it back in your cold storage. When you want to stake something and generate yield on it, you put in a smart contract with a decentralized protocol, and as long as you want to get money on it, yield generating funds, and then once you want to take those profits, put them back into storage in cold storage.
So it appears that we have very speakers with common sense, because what we see from the industry and crypto Twitter in particular is that decentralized exchanges are the only way to go and to move forward. But I really love to hear that we have this a very interesting approach to this topic. Sergey, do you have any other questions? Because
I don't have a question yet, because we are very close to running out of time. But what I see in this situation, that decentralized world and centralized world have to find some kind of consensus to being on the same place, because part of the people very eager to participate, eager to deal with the people around the globe, and another one are ready to deal with all this stuff online, all this stuff I'm talking about, digitalized, and the code as well. That's why we have to find out the consensus. Guys, we have for 1 minute to each other to make, I don't know, some message to our audience, and then good to finalize it. Nate, just start from you.
Yeah, sure. We're at a very interesting stage in Bancor's history. We've been talking a lot about contributing liquidity to decentralized liquidity pools. It's been a very interesting use case for investors, but there's been a lot of issues. There's a lot of unknown risks when it comes to the assets shifting caused by arbitrage. You can end up losing a lot of money, not because of a hack, but just because of price movements. And it's something called impermanent loss that Bancor, we think we've just solved it. And so we've just today, or actually it was last night, released our v2.1 protocol version. It's a way for you to stay long on your tokens, stake them in a liquidity pool. You don't have to separate it into the other assets in the pool. You just stay long on one token. You generate the swap fees, and there's no arbitrage risk, also known as impermanent loss. And then you could just pull them out when you've made your money and always retain your principal. So we're very excited about that. Check it out, Bancor v2.1. Yeah, that's it.
Thank you. Sean, your turn.
Well, we're all-rounder exchange, providing from derivatives to standard spots trading products. So, and the more recent, we also offered staking of the DeFi tokens. So check us out at hbdc.com.
Thanks a lot, George.
I believe that DeFi is the bridge to the legacy world and the fiat world. So it has a role to play. So you can integrate with credit cards, payment systems, etc. But the future for investment and flexibility and decentralization is definitely DeFi. So I invite you to look at new DeFi projects like DeFiX and the ones that were mentioned by the other gentlemen here. And I think that's where the big growth is going to be in the next 1 year, 2 years. Our business is really about innovation. So the more innovation we introduce, the better service we introduce to the users, and we introduce lower cost operational. That means everything runs in the code, and the code runs only with electricity, no human intervention.
Thank you guys to all of you. Thank you, Catherine. Thank you, Nate, George, Sean. Thank you for your time. It's very interesting topic, but we have to go forward, and we are looking for the next speaker after a very small break.
Thank you, guys.
Bye. Bye.
I'm working all over the world. Different languages, currencies, tickets, arrangements, challenges. Once I wondered, is it possible to make life more dynamic?
I'm control freak, because my business is only my responsibility.
I have a small business, but my worries are like I have a huge one. I strongly believe that only when I'm in harmony, I can teach someone to be in harmony as well.
I used to think that planning is for old fart. Over time, I realized that planning gives me freedom and opportunity to make life be as you want it to be.
Unpredictability, improvisation makes me feel alive.
When the world springs around, it's very important to find balance, like when you are dancing. Discover, investigate, make plans, earn, create harmony.
Pawns, a whole world in a couple of clicks.
Hello, everyone. We're back, and our next speaker is Jordan Lyle. He is the founder of Meme, product lead of Consensus.
Hi, everybody. Hope you're enjoying the DeFi Global Summit. My name is Jordan Lyle, and today we're going to be talking about DeFi, NFTs, and the path to mass adoption. So again, my name is Jordan. I work at Consensus. I'm a DeFi product lead, and then by night, I'm the chief meme officer for the Meme project. We'll get into what that is in a minute, but I'm really excited to be here because I'm, I think, one of a small group of people that are experimenting really at the intersection of DeFi and NFTs. And you could say that NFTs are just like a subsection or maybe a small piece of what's going on in DeFi, and I'd agreed with you. But it's really interesting when we can take some of these financial principles and these mechanics and mash it up with what's going on the DeFi side. Digital ownership, unique assets, art, really some fun things that we can do. But what I wanted to do today is kind of pick apart these things step by step. So jump in and talk about what's DeFi, obviously, so you have some sense of what's going on. But if not, we'll get you up to speed on what's going on DeFi. Talk a little bit about NFTs. And then we'll get into what does it mean to combine DeFi and NFTs in a couple of the projects, including the Meme project. So let's get going. DeFi, again, unless you've been under a rock for the past 2 years, you're probably familiar with what's going on. DeFi stands for Decentralized Finance. And I like to describe DeFi as financial experimentation on a blockchain at supersonic speed. And that's it. And that's why I'm fascinated by it. And that's why I'm building products in DeFi. So, you know, Bitcoin was amazing, and the blockchain allowed Bitcoin to facilitate peer-to-peer transfer of value, right? I can send you a Bitcoin. We don't have to worry about banks or any other central authority, straight person-to-person transaction. Well, with Ethereum and lately the DeFi popularity rise to power, we're seeing really the continuation of that original vision, where it's more than just sending money back and forth. We're actually able to take these tools via smart contracts, and we're able to start building out this infrastructure that one day will replace banks. And it's supersonic speed, meaning that if you miss a day or two and you're not following what's going on in DeFi and the various blogs and Twitter and Telegram groups, then you'll miss it. It's happening so quickly, partially because it's decentralized. Anybody can build on it, and everybody is, and it's all composable. So everyone's taking products that have previously existed, mashing them up, and you're able to build working products within weeks and months instead of months and years. So I've got a quick kind of live look in on some developers building on DeFi. Are you ready? So it's moving so quickly. Again, blink and you'll miss it. A week is like a month in DeFi terms. And again, if you've been just not paying attention for the past several months, which I don't blame you, but you would have missed this crazy story of what total value locked on DeFi has turned into be. Just a few months, we were raving about $1 billion being locked up and how exciting that was to hit that milestone. We're at 11 billion. We just passed 11 billion a few days ago. And what that means, it's total value locked. So it's all the value across all the different protocols, all the different pools, the US dollar equivalent of all the assets that are currently locked up. It doesn't really necessarily talk about volume or transactions or users or user growth. It's really just looking at the almost assets under management, but it's the total value that's locked up on these smart contracts. And many of you should know, but you're starting to be able to do more and more within DeFi. We've got the lending and the borrowing and the trading. You can take out insurance across some of these protocols. You're able to trade things, using derivatives, you're able to trade stocks and other assets that otherwise you wouldn't be able to do on a blockchain. But thanks to derivatives, you're able to at least a synthetic version of those assets you can trade. And of course, speculation. And you may say, hey, I could do all those things prior to DeFi, and you'd be right. But with crypto, we're able to do this without a third party in a lot of cases. We're able to take these actions and well, let's get into it. Some of the benefits of DeFi now, it's non-custodial, meaning in a lot of these cases, it's decentralized, it's non-custodial. If you don't hold the keys, you don't own the crypto. It's open, just like the internet. There are no borders. I can send you money from where I'm sitting here in Los Angeles to wherever you may be. We can transact, we can participate in a Uniswap pool, and it doesn't really matter the borders. It's all very transparent. Many cases, the code is right there, open on the blockchain, so you're able to go and inspect the smart contracts. It's composable. As I mentioned, a lot of these protocols are borrowing from previous smart contracts or previous projects that have had success, and they're kind of mixing and mashing. And we're able to build out this infrastructure using products that have existed in the past. That's why you'll sometimes hear the meme money Legos regarding DeFi, because we're just building on existing things, existing Lego bricks that are already there. And then again, it's decentralized. No one can come in, no government or entity can come in and stop what's going on. It's uncensorable. They can always affect the front end, right? They can, if there's a corporation, they can stop business there, but they're unable to kind of censor the actual on-chain protocol. And some of the top projects in the space, you're probably well aware, Uniswap and Maker and Aave and Curve, a number of projects that are continuing to innovate and continuing to build out this ecosystem that's going to run DeFi for decades to come. And you may be looking at these projects and saying, hey, all of these tell me I can earn an interest rate, right? But which one do I trust? Well, at Consensus, one of the projects that my team has worked on is called the DeFi score. So it's like this objective way to analyze risk. So I see this group over here is telling me I can earn 10% annually. This group over here is telling me I can earn 12%. Which one do I trust? Well, unless you can read smart contract code, it's a little bit difficult to ascertain, okay, these guys are legit, this is a scam, these guys have their stuff together, these ones are a little bit fly by night. How do you tell? By looking at the code and looking at the website and the community, maybe. But what we did at Consensus in the Codify group, we built the DeFi score, which is this, it was almost like, what does a ratings agency on a blockchain look like? So really early on, it's all open source and we kind of shared it with the community, but it takes multiple factors into account. Is there a bug bounty? Has the smart contract been audited? How long has it been around? What's the centralization index, which means can someone, some bad actor get in here and mess with things, or is it completely decentralized? And then financial metrics like utilization index of the pool, and then how much liquidity is there, and then the quality of the liquidity. So all these factors kind of generate a single digit or a single metric that allows you to apples comparison, helps you understand the risk that's going on, that you're susceptible to. So the higher the number, the better. You can check that out at defiscore.io. So wrapping up DeFi, I think it's pretty clear, at least that's why I'm here. Many may, it's probably up for debate, and many may take the other side of that. But personally, I believe that financial disruption is going to happen. If you think about where we're at, depending on your country, especially in the US, it's easy to work with existing banks and you get your money quick. But if you try to send money across borders, or if you talk to anybody that's in a country where the inflation is crazy or the services are not available, it's clear that something has to happen long term, right? That disruption is coming. It's not if, but when. And I believe DeFi protocols and the teams that are building are helping to create a new and better system for everybody. So that's DeFi. Let's look at NFTs. NFTs are really, really exciting. So my personal journey, right, is you continue falling down the rabbit hole of crypto, and that's something that gets thrown around a lot, right? The rabbit hole. You discover Bitcoin, and then you know, a few years later, you discover all these other things like Ethereum and what's being built on Ethereum, and then you discover DeFi. Wow, we're actually able to build some real cool products that could revolutionize finance. And then you go a little bit deeper and you realize, wow, there's some really cool things called NFTs, and that allows like unique digital ownership and proof of scarcity and a bunch of cool things. And right now we're playing with a bunch of fun art projects, but it goes beyond collectibles and art, and it actually could extend into virtual worlds, into really, I think, bridging the Web 2 user to Web 3, bringing on millions of people into this space. So let's dig into what NFTs are a little bit. NFT stands for non-fungible tokens. They are unique digital items managed on a blockchain, where their ownership is managed and tracked on a blockchain. So they're non-fungible tokens. You could think of the Bitcoin and Ether and all these other coins as fungible. So fungible is where each unit is interchangeable and indistinguishable. If I hand you $5 bill, you hand me another $5 bill, that's fine, right? If I send you a Bitcoin and you send me another Bitcoin, they're all the same, so it doesn't really matter. However, if I send you one NFT and you send me another NFT, there's not necessarily, just in how I described it, not necessarily a fair exchange, because no two are alike in many cases. And it's really cool. It's early days, but it's pretty exciting. Everyone kind of remembers, if you've been in the space long enough, you remember the days of CryptoKitties in 2017. This was kind of a phenomenon. It essentially broke Ethereum for a few days when it kind of gained in popularity. So everyone has this kind of, depending on how long you've been in the scene, this soft spot in your heart for the CryptoKitties. And a lot of people, myself included, it kind of said, okay, that was cute. That was 3 years ago. But many people are surprised to learn that this is still kind of, a lot of people have been building during this previous 3 years, this bear market, so to speak, and they continue to build and innovate, and communities continue to grow. And it's really exciting to see, and you can see here the kind of the rise in total market cap. So this is the value of assets tracked on nonfungible.com every year, and the 2020 number is estimate. I think it's actually going to be quite a bit higher. So you can see it's almost like the early days of DeFi, where it was slow growth, didn't really attract attention, and then all of a sudden hockey stick goes up, and that's all everyone can talk about. So I think it's the early days of that same kind of phenomenon. So let's get into some examples of what NFTs are. Collectibles like the CryptoKitties, like a bunch of other collectibles that are out there now. Art, I think it's separate to call it art, both digital art, and then we're tracking real life art, or painted on a canvas kind of art that's tracked. The ownership is tracked on a blockchain. Concert tickets and other types of virtual tickets that allow you access to exclusive events. In-game items, right? Everyone talks about the long-term dream is having a top game and being able to trade your skins or your weapons and being able to sell them. This gives you that opportunity. Domain names and even ownership of real-world assets. Some of the benefits is that NFTs are unique. They are rare, and you can prove it. They're indivisible. So for most part, some of them offer multiple pieces per item, but for the most part, they're indivisible, which means you couldn't cut them down. Like, they're starting to do some experimentation around sharding. However, for the most part, these things are bought and sold and held as a whole, one item. They're trackable. You could see this is kind of common in art as well, and that's called provenance. And that's where I can see the ownership history. So I could see for this NFT, okay, Vitalik minted it. He sent it to me. He sent it to me, and then I sent it to you. Some of the top projects in this space, some you may have heard, others maybe not, but it's CryptoKitties, Gods Unchained, Decentraland, Axie Infinity. There's a bunch of projects that are really doing some cool things within this NFT space right now. You're seeing lots of volume, lots of usage, lots of secondary market volume. So that's really exciting. That's all the power of the NFT and what can be done. So we've talked about DeFi, we've talked about NFTs. Just within the last couple of months, there's a bunch of people experimenting at the intersection of the two, including my project, the Meme Project. But it's really interesting to think of what can happen and what we could build when you kind of mash up both these financial properties and financial mechanics with the world of NFTs. And when it comes to DeFi, NFTs can unlock even more potential for decentralized finance. As mentioned, the DeFi space is one of the fastest growing niches in crypto, and it has huge potential. Some people are experimenting with using NFTs as a collateral for a loan. So let's say you want to borrow DAI, for example. You have a rare crypto kitty. I could deposit that into a smart contract, almost like I would in DeFi, using like MakerDAO. I can deposit ETH and get back DAI. Where here you're able to do something similar using the value that's inherent in this NFT. So the uniqueness and the value of this NFT allows me to deposit that as collateral and then get back another cryptocurrency. You're seeing some cool things around wrapping financial products within an NFT. There was an experimentation where they wrapped contract cover. So Nexus Mutual Insurance for a smart contract, they wrapped it in an NFT. That way it's tradable. You're able to easily trade your insurance. So there's a lot of other things that I think could help obfuscate a lot of the complexity by wrapping them in NFTs. And then NFT mining or NFT farming, where you're able to really tap into this unused or inexperienced audience and get them excited about NFTs. You're able to do cool things and tie in some of this tokenomics into the NFT world. So I think this combination of NFTs and DeFi can really help both for like improving the user experience and attracting a bunch of new people, millions of people into Web3. One great example of a project developing kind of at the crossroads of DeFi and NFT is the project that I am a part of, and it's called Meme. You could check it out at don'tbuymeme.com. Our icon is a pineapple, and it's really fun. We're able to get like high quality, high concept art like the one you see here. And it's for fun, even though we're building some really cool tech and some really smart people are behind this thing. We're having fun. So let's get into what that is. And we kind of, or we're really early on, and some would say we pioneered this movement of NFT mining. So with Meme, we mashed up the most exciting innovations in DeFi and crypto collectibles, where you're able to put your meme tokens, which are typical ERC20 tokens, you're able to put those to work and farm exclusive NFTs. So this is something that really didn't exist before. Here's one example of our pool, our artist series. And here's a collection of a few NFTs, animated 3D pineapple NFTs. So what you would do, you would come in here and you would stake your meme token, which means you lock it up over time. You're not giving it away. You're not selling it, your tokens. All you're doing is locking it up for a period of time. At any time you can unlock it, but you're staking these assets. And then the longer that your assets are in the pool, you earn what we call pineapple points or pineapples. And over time, you're able to accumulate enough pineapples and you can mint some of these rare and exclusive NFTs. So all these have been sold out for the past couple of days. But early on, you would have been able to exchange their pineapple points for these NFTs. And depending on the rarity, there's different value attached to these. So you're able to mint these NFTs that otherwise wouldn't have existed. You can then take them to OpenSea and sell them for profit, or you can hang on to them. There's a number of other things that you can do with these NFTs. A lot of people love to buy and sell and trade, and they see a lot of value there. And for the DeFi guy who's more focused on on alpha and capturing additional revenue, he's able to lock up his assets, mint an NFT, go sell it on a product, on a system like OpenSea, and get some really good returns. And again, we've been a protocol for all of 6 weeks, so it's very early days, but we've seen some incredible traction over these 6 weeks. Just about 2,500 token holders of the meme token, even more NFT holders, over 3,000 unique owners of these NFTs. Our OpenSea volume just reached the 500,000 mark, and that's not what's done on our platform, but as soon as a user has an NFT, they go to OpenSea and they sell it. So the amount of volume that we're seeing on OpenSea on the secondary market just passed $500,000 USD. And what's great is that it all comes back down to community, and our community has raised for charity. With this most recent auction that's going on, it'll be right around $10,000 raised for charity. So it's super exciting. And that's it. Again, my name is Jordan Lyle. You can find me on Twitter at Jordan Lyle. Really appreciate your time. Thanks for watching all the way through. Check out the meme project, check out the DeFi score. Hope you enjoy the rest of the conference. Just leave you with this: go forth and experiment. Thanks, guys.
And it was Jordan Lyle, founder of Meme and product lead at Consensus. We're going to talk about more about DeFi, and in particular about DeFi perspective with Kyle Chassé from CEO of Master Ventures in just a minute.
I'm working all over the world. Different languages, currencies, tickets, arrangements, challenges. Once I wondered, is it possible to make life more dynamic?
I'm control freak, because my business is only my responsibility.
I have a small business, but my worries are like I have a huge one. I strongly believe that only when I'm in harmony, I can teach someone to be in harmony as well.
I used to think that planning is for old fart. Over time, I realized that planning gives me freedom and opportunity to make life be as you want it to be.
Unpredictability, improvisation makes me feel alive.
When the world springs around, it's very important to find balance, like when you are dancing. Discover, investigate, make plans, earn, create harmony.
Puns. A whole world in a couple of clicks.
We're back. Hello, ladies and gentlemen. We are, as you see, on Decentralized Finance Global Summit, DeFi, and today with me, I'm really honored. Welcome, Kyle Chase. We are met each other. Yes, it's not last year. It's just still this year, but before isolation, before all this stuff happening around the globe. Kyle, hello, nice to meet you here.
Nice
yes.
to see you again. Yeah.
A couple of words about you. Yes, what do you do now? What's your job?
Sure. So, Yeah, so we met in Thailand, and I'm still in Thailand. The parent company that I run is called Master Ventures. We're a venture studio, and we're building out different projects in-house. And we just publicly released information about our project right now called Paid Network. And so we're really excited about that. We have a lot of traction and a lot of excitement around that. So yeah, that's kind of what we're working on right now is Paid Network.
Okay, perfect. Actually, what we see starting off from this year, DeFi world goes crazy. I don't know how it's happened, but I think you personally see and understand all of this stuff. What's your opinion? What's happening around the globe? What's your perspective? What's your thoughts about DeFi?
Well, I mean, it has materialized this year, but crypto has always been about DeFi. Bitcoin is DeFi as well. It's disrupting the financial institutions. But this year we've seen great DeFi projects get some attention, which is amazing, and then you've seen really bad ones get attention as well. And there's just a lot of. It's kind of like 2017 when there's a lot of people who are just trying to grab money. A lot of people are getting greedy and just kind of jumping on anything that has a Y in front of it. It seems like, but yeah, there's I think that there's a lot of good opportunities out there. People just have to do their diligence, and I personally kind of stay away from any project that doesn't have a transparent team. But yeah, that's my kind of perspective of what's going on right now.
Okay, I see. Actually, when we see each other, yes, we've been on the DAO consensus. Yes, on this logo type. Where is it? Yeah, it's here. Right. Yeah, and now, what's your thoughts? What's coming out with DAO? Because when I see from the starting of the year, there have been so a lot of organizers called DAO, the Decentralized Autonomous Organization. Somehow this trend goes down. But in your perspective, what's going on now?
Well, I think DAO is extremely important. Everything that we're doing is running off of a DAO structure. There's two projects really, right? So Paid Network that I talked about is the aim is to become a DAO, of course. If you want a decentralized project, it should be governed in a DAO structure. And then there's also a House of DAO, which we talked about before as well, which we're also building here in Thailand, which is this blockchain, crypto, co-working, co-living village. So so I mean, DAOs are super critical to the governance of any type of token ecosystem, and you're seeing new creative ones. We're seeing DAO venture funds right now for the first time in 2020, which is kind of an interesting idea. Actually, I think that's something that we have been looking into as far as supporting and working with. Because it's all about disruption, and DAO VCs are trying to disrupt traditional VCs where they're investing in projects and adding more value by having their investor community actually, promote the project that they're investing into. So I think that's pretty interesting.
Okay, cool. After isolation, after worldwide lockdown, I am personally started, these online shows called dTV. We're going into starting shows on dTV channel, Decentralized Television. I'm sure I see that you are personally starting your own shows. Just please be a little bit more about information about what exactly your show is about, because I am fond of your shows and it's very cool.
Thanks, man. Yeah, I appreciate that. If you want to, find my channel on YouTube, it's just my name, Kyle Chasse. And what I do in my normal course of business as an investor as well, I'm always researching different projects, and that I think because there are so many projects out there, and for a lot of people, they don't really know how to research and what to look for. And so because it's something that I'm already doing in my time, I decided to share the research that I do with people who are interested in it. So, I really look for high quality projects to help people kind of sort out, to kind of call attention to the projects that deserve it. So, sometimes I'll research, 10, 20 different projects before I choose the one that I'm going to make a video about. And, I believe that sometimes I do projects that are pretty new with a much higher risk to reward ratio, but I'll kind of give justification why I think it has a lot of potential. And then sometimes I'll talk about projects that are much bigger, like Polkadot, for example, was my last video, that has a less risk to reward ratio. So yeah, I just basically am making my research kind of public, and then letting my viewers kind of make decisions based on what I'm sharing with them, and then encouraging them to do their own additional research as well.
Okay, Kyle, give us a tip. Really, it's very interesting and important, because people around DeFi projects looking for the best one, looking for the best yield farming, I don't know, looking for growing from another. Just give us a tip. Maybe you are being aware what kind of project have to be seen from your perspective.
Well, and in my opinion, if it seems too good to be true, it probably is. Something that people have to remember is that, something like DeFi aims to disrupt traditional centralized financial types of tools. Well, DeFi can only optimize an ecosystem so much, right? What we're doing when we're building decentralized protocols is we're removing the middlemen, therefore removing the profit margin that centralized entities take from the people who are the participants, right? So I always use the example of like Uber versus decentralized Uber. Uber takes like 30% of the revenue from the drivers. So if you created a decentralized version, maybe the driver would get to keep 99% of the revenue versus only 70%. So that is what the realistic types of beneficial gains you could have in a decentralized system. Like you couldn't expect a decentralized Uber to be successful if it was like a $1 ride to the airport when Uber costs $100, right? So that's not realistic. So what you have to keep in mind is, like, when you're looking at projects, you have to say, okay, because we're removing a centralized entity from this type of service that's being offered, is the benefit that I'm receiving somewhat in that same range that the profit would be taken out if it was a centralized entity? And I think if the answer is yes, then you could proceed to see if this is a viable long-term project. I'm not saying that you can't make money with these unrealistic, crazy DeFi projects that offer huge yield farming. I just don't think it's sustainable. So if you like gambling, you can get involved in these things, but there's going to be rug pulls, and there's going to be scams, and there are unaudited contracts and things like that. So, I am much, I think being in crypto in general is kind of risky, but I think, it's a smart idea to try to look at projects that have sound business models. And I think these huge yield farming, high APY kind of projects aren't sustainable.
I have just maybe some question. It's very interesting for me why so many projects are going to be so edible. Sushi, pasta, hamburger, or something else. Yes. What's in people's mind? Is DeFi world, I don't know, is something about eating something or something? I'm looking for your opinion. What do you think about it? Maybe, I don't know, why people goes crazy on this edible side.
People like memes, and people like trends. And I think Yam started it. It was just a ridiculous meme, and it had a lot of attention. It was something that kind of was brand new in the space, and really, I think what did they have? Something like $500 million locked in 24 hours. That was unprecedented. So for people just to kind of fork Yam and call it, potato or something, that seems like a logical way to make some money. And then people just kept forking forks, and then calling it a different food coin. So that's kind of the trying to, if Yam would have been called Toyota or something before, then you probably would have seen other car company types of forks as well. But it's just trend setting, I guess.
Okay, Kyle, we have to finish for today, but actually I'm looking for the message to our viewers. How to deal with this DeFi world.
Yeah, do research and understand what you're investing in, and look to see if it's sustainable. Follow me on Twitter and YouTube, and check out our Project Paid Network. I think this is a good example of a quality project that is realistic. Yeah, and I think again, the message is just, if it seems too good to be true, it probably is. So unless you're willing to gamble with whatever you're putting into it, probably take caution.
Okay, perfect. You know, guys, on our summit, on our decentralized summit, you have all the chances to see what's happening what's really happening from this world. Thank you, Carl. Thank you for your time. My pleasure to have you here. Yes, see you. Bye.
I see you again. Bye-bye.
Hi, everyone. Welcome back. We would like to remind you that the summit's organizers are DAO Consensus, the business community helping you adapt to the post-coronavirus reality. Join the community to enjoy some pretty great privileges and awesome conditions. You will be able to have access to tokens, different events of the community, and education Telegram group and or Twitter right away.
Guys, also we have co-organizers of this summit. They are Go Up. As technical partner, we have Platinum Company. As general partner is Pons, and our general media partner is Forklog. Also, we have special partner as Tesla Max, DeFi Rex, NeoMax, Neuronix, dTV, ThinkTank community channel, Coinsbeat, CoinDark, Colibri Group, Zelwin, and
at the end of this year, this very, very fruitful and events year, we're going to have a conference called the Result of the 2020, where I assume we're going to talk a lot. We're going to be talking about what happened during the 2020 and what we expect to happen in the market and in the industry in 2021. And there'll also be some rewards for being the best and awesome crypto community person. So don't forget to register for this event right away.
Guys, we are get ready to run in very near future panel with our greatest and distinguished people around the globe. Is going to be about DAO from a legal perspective. We'll be with you in a couple of seconds.
I'm working all over the world. Different languages, currencies, tickets, arrangements, challenges. Once I wondered, is it possible to make life more dynamic?
I'm control freak, because my business is only my responsibility.
I have a small business, but my worries are like I have a huge one. I strongly believe that only when I'm in harmony, I can teach someone to be in harmony as well.
I used to think that planning is for old fart. Over time, I realized that planning gives me freedom and opportunity to make life be as you want it to be.
Unpredictability, improvisation makes me feel alive.
When the world springs around, it's very important to find balance, like when you are dancing. Discover, investigate, make plans, earn, create harmony.
Pons, a whole world in a couple of clicks.
Hello, everyone. We are back on Digitalized Global Summit, DeFi, and today our panelists are Jack G. He is Managing Director of Cybervan, Marita Tetibut, CMO at Gate.io, Shane Hong, Marketing Manager at Kyber Network, and Gordon Einstein, Founding Partner at Crypto Law Partners. Guys, nice to meet all of you here. I am with my co-host, Catherine Ross, here as well. We're going to talk about DAOs, about how it looks like in maybe Law's perspective, in your perspective. Gordon, I think the best way to start from you as crypto lawyer, as the person who I know about DAOs much more better than each other of us.
That's a pretty big windup that I'm going to try to live up to. Hi, everyone. I'm Gordon Einstein. I'm the founder of Crypto Law Partners. My law practice focuses exclusively on crypto and blockchain. And happy to say I'm working on a fair number of DAO-related projects. And I look forward to speaking with other panelists about this. The constant issue right now is, since DAOs don't yet seem to be a recognized legal form in the sense of providing limited liability or the ability to contract with traditional contracts, what do you do about that? How do you protect your founders? How do you enter agreements? Do you simply bypass this entire structure, or do you somehow, have a boot entity, I like to call it? I've been playing around a lot in Switzerland with different foundation and association forms, but things are done differently the world over, and I look forward to speaking with this group.
Perfect. Mary, your turn.
Hi, everyone. My name's Marie Tadibwet, and I'm the CMO at Gate.io. Gate.io has been a crypto exchange since 2013. So, we've been operating in the crypto space for a while now. I think one of the big things, and I talked about this on my weekly show that I do on the platform, because we do live streaming on our platform. I think, most of the crypto companies I know are applying for all of the licenses that they need to be able to function. There is a real will to be able to operate in a regulated space, especially since, there was more than just like the very early adopters. And as a result from that, we're really trying, but there's been a lot of indecision from regulators. And so obviously you can't make any commitments when the regulators themselves have not made any commitments on what they're planning on doing. Now that we're seeing a little bit more structure when it comes from regulators, we're able to operate in a way that's a little bit more clear. So for example, in countries and jurisdictions like Japan or South Korea, we've seen some real measures being taken, and we're able to operate within those measures. Whereas I think in a lot of other places, things are still very unsure. And so it's not so much about being willing to, but as much as it's about being able to.
Okay, Jack, welcome on floor.
Hi, pleasure to be here. So hi everyone, I'm Jack, and I'm the Managing Director of Cybervan. So to those of you who have not heard about Cybervan, we have actually been here for a while. So Cybervan's been established since 2017, and different from the other guests on this panel, that we're actually a public chain. So we're nothing to relate it with DeFi or CeFi, so to speak. But then again, we're still here to talk about DAO. And what makes us different from the other blockchain companies is that, or most of the blockchain companies, is that we wouldn't say we are 100% blockchain company, because we do a lot of centralized work and regulatory work around distributed databases with the government and banks and etc. So regarding regulations around DAO and blockchain companies, I think that's definitely necessary. I think part of the reason why I say this is because I have Chinese blood in my veins. So I sort of believe that. And everyone in this space has been hearing a lot of things about, fall of nations, rise of sovereign individuals and everything. But I do believe that moderation in everything is the key, not only in decentralization, but also in regulations as well. I think China is doing pretty well in this. We didn't actually say banning crypto and banning everything, but the government is sort of like, taking steps and taking time to see how everything goes. Our entire theme is about DeFi, but I wasn't really participating in DeFi like most of my colleagues from early in the industry, because we just wanted to wait and see if the whole fuss is like 2017 again. And we actually have been warned by our police that be careful with some DeFi projects, or so to speak, DeFi, with a lot of high yield in yield farming and everything.
Sorry, I got to ask, you were warned by police or you were warned by regulators?
No, I have friends from the police department telling me that, okay, be careful with some DeFi and do not tap into those they call themselves DeFi, but they have really high yield and call themselves in names of food as well. They just basically warn us because we're friends. And yeah, like I said, because when we are dealing with freedom, there are bound to be some chaos in the space. So some moderation in regulations is definitely necessary. That's my 2 cents.
Okay, thank you, Jack. And I'd like to welcome Shane Hong. Your turn.
Hi everyone. So I'm Shane. I lead the marketing efforts at Kyber Network. So we are an on-chain liquidity protocol and one of the top liquidity providers in the DeFi space. So we recently actually launched our Kyber DAO in July to govern our protocol. And we have seen quite good success over the past few months. We have about more than 8,000 on-chain voters. We have about 50 million over KNC staked on the DAO for these voters to actually participate in governance and vote on certain topics that they are interested in. So later I will share more on this. But one interesting thing that I think a lot of people tend to get confused on is that Kyber Network, as a protocol, we have also many different dApps that are actually integrated with us, and one of which is our own in-house front end for trading, which is kyberswap.com. So our protocol exists on the blockchain, right? We just use smart contracts, it's open source. We have a deployment on IPFS as well. So in terms of the protocol, we try to be as decentralized as possible. And there's basically no way anybody can use the protocol by just looking at the documentation. But our front end for KyberSwap, we definitely have a full legal team supporting us and making sure that we are compliant in every way. And we have the benefit of being based, at least the team, most of the team are based in Singapore. In Singapore, we have quite, the government is pretty receptive to cutting edge technology. So there have been recent laws and regulations which are more clear than perhaps some other countries. But even in Singapore, sometimes there are certain gray areas that we definitely need to seek legal consultation on. And yeah, so it's we have an interesting perspective because we have a protocol that is on a blockchain, but we also operate a front end for that, and we need to make sure that the front end is being compliant to whatever jurisdiction that they were in.
Okay, guys. Also, I want to mention that we have today with us Catherine Ross, co-host of this great event. Catherine, if you don't mind, yes, I'm looking also a very interesting question from your side, but we have to start from Gordon. Gordon, your turn. You have a question already.
I would not actually jump in front of Catherine, so I'm gonna, ladies first. Catherine, please.
Oh, thank you. I do have a lot of questions, but I think.
Oh, never mind. No, just go ahead.
Okay, no, I think I'll start with the first one, which is, I think, the most obvious one here. As the name of the panel that we have is DAO from a legal perspective, what is the best country for, running a DAO company from a legal perspective? See?
I'm gonna hijack your question. I threw this out to the panel. I am not aware of any jurisdiction that has enabling legislation specifically for a legally recognized form called a DAO. Now, I thought Malta making some moves in that direction. I am not claiming to be fully tapped in, but are any of you aware of any jurisdiction, Singapore, that's actually put into effect law saying that DAOs are a recognized legal form? And Shane, I'd love to, all of you I want to hear, but Shane, since you have a DAO, have at it.
So our DAO is not registered in any jurisdiction, but if you're talking about a for-profit DAO that is registered in a certain country, the one that I've heard of is the Lao, LAO. So they, I mean, they
but
call
is it
themselves
registered as a DAO, or is it registered as some entity that's tethered in some way to that DAO?
I'm not sure about that, but they call themselves a limited, I mean, it's a LLP, so it's a for-profit DAO, and if I'm not wrong,
so
they are based
probably
in
limited
Canada.
liability partnership.
Yes, but I don't know whether in the entity, is there any special, like, considerations for the fact that they are a DAO. Yeah.
Captain, the reason I hijacked the question is it's assuming something that I think a lot of people believe to be true and want to be true, and I'm always looking for it to be true, which is jurisdictions somehow recognize the uniqueness of DAOs, and therefore you can have a good jurisdiction for setting it up. There's an argument that because it's entirely a blockchain or smart contract based entity, that it doesn't really have geographical locus, if you like. It's not set in this or that jurisdiction. There's only the people who are involved in it. There's only the people who set it up. And the question is, where are they and how can they protect themselves? I think that's a huge gap in the law that I think my co-counsel are trying to address. But I'm not aware of any jurisdiction where I can go to the Secretary of State or the minister or whoever and say, I'm setting up a DAO, where do I sign?
So they recognize, but they don't actually let you do anything with it, or
they recognize it as a new word.
Okay.
Just like, there's new words that come out all the time. Like, if someone is woke, believe me, when I was growing up, woke mean you just got up in the morning. Now it has all kinds of political meanings. It's like it's like the word, I can't even come up with a good one, but it's like, it's a new term. People know what it means conceptually to the extent that anyone knows what it means conceptually. But the point I harp on often is that there's legal forms you can form just by starting a business. Like I can go out and be a sole proprietor. I don't need the government's permission. You and I can work together for a profit and become a general partnership. But for almost every other legal form, where there's a limited liability partnership, LLP, LLC, limited liability company, a corporation, or another jurisdiction, you have a, like in a German-speaking one, you have a GmbH or AG, a society limited, all these things require a charter from the government. And that charter provides its founders, its shareholders, its operators with limited personal liability and grant legal personhood to the entity. So that the entity can have contracts, get insurance, at least in the US, engage in speech that's protected. There's all these legal consequences being recognized by the government and being granted this charter. DAOs probably should have something like that, but they don't yet. And in the case of the law, autonomous organization, they're doing what I'm seeing a lot of DAOs doing, which is they sort of tether their incorporeal blockchain-based something to a mirror image here down on Earth in legal space. That's an LLP, a foundation, a registered association in Switzerland, something. But unless any of the panelists want to disagree with me, and I don't claim again to be up on everything, I don't think any jurisdiction has recognized a DAO. And then the next question, of course, is you don't have to wait for them. What do you do?
I think in particular, that's so true because most of the licenses that you apply for are for, having particular services, not, for your organization exactly. You can have a company and you're applying for the license to be able to operate certain products.
Plus, who owns a DAO? Who operates a DAO? Who are the beneficial owners of a DAO? I mean, you have to review. You have to provide all that information. Beneficial owners, especially when you're setting up entities now because of anti-money laundering rules. Well, it's DAOs. If anything, they may be. Sergey, you and I were discussing this. They may be cooperatives, is maybe a close English analog to some DAOs. And cooperatives usually mean that the producer, the consumer, and the owner of an entity are all the same bunch of people. And people wear multiple hats, have multiple roles. So if someone is participating in a blockchain platform, benefits when it gets used, uses it themselves, and maybe even develops programs for it, you know, are they the owner of that platform? Not in any kind of blockchain-y sense. I mean, there's no smart contract to that effect in most of these cases, and you wouldn't want one. So, Maria, to your point, I mean, you know, when some entity signs for the DAO, who is that? Who voted them into position, and does that have any legal force? I think there's at present strong arguments that no, it doesn't have any legal force. Who's this person? I mean, what's stopping me from going in and saying I represent this DAO? I'll sign here.
You know, Gordon, I
So
think
what do you do?
You're looking for defendant. You're looking for the people who are going to be some kind of responsible for all this stuff going inside of DAO, because you're treated in somehow under the law, under the regulation. That's why for me is, I understand your point of view that you are looking for any person or any company or any material. I think the thing which are going to how it say in Russia.
Well, let me throw this. I hear what you're saying. Look, I'm in this area law for a reason. I'm okay with risk. I'm okay with not getting along with regulators. I'm okay with arbitraging between jurisdictions. I'm okay with being fantastically aggressive. But the thing that makes that not reckless is understanding the environment within which you're operating and minimizing losses and maximizing gains. So I always do min-max analysis. There's also an expression called red teaming, which, you know, is based on the Soviet times, when you would test out a plan and someone else would, to test your plan, play like they were the Soviets. And then you realize you can't actually take back Poland because the red team would mess up with your plans. So I always try to red team this. I always try to think from the perspective of a litigant or a regulator who doesn't believe what you're telling them, and what will they do? So when it comes to the law of DAOs, I think we get into areas of how can you, we all want to do stuff. You know, I'm not sitting at home doing, you know, gardening law. We all want to do stuff, but we can't just wait for the regulators. How do we approach it? And I'm interested, you know, again, going back to Kyber, I'm interested, you actually did it. I understand you're not a lawyer, you're not the legal team, so you're not speaking for them, but what was your impression of how they approached it?
Yes,
So,
you know, Gordon,
first-
if you don't mind, I would like to redirect that question to the Jack.
Sure,
In his
go ahead.
perspective, not so being included in this blockchain space, and what's your perspective? How do he treat these new phenomena, for example, in point of view of his company?
Well, to me, I can only speak in the perspective of how DAO is being treated and regulated in China. It's difficult. It's difficult to actually to say like who actually owns the DAO and who's to blame if something goes wrong. But in China, we're actually working with the Chinese government with something really astonishing, because information privacy is nothing over here. Like, we trace everything, we monitor everything, and we have amazing, you know, facial recognition and you know, artificial intelligence to trace everything, all of the traces that you leave on the internet. So whenever something bad goes on, well, in case of DeFi or anything created decentralized, just trace the money. But it has to start from somewhere. It has to start from fiat, and it always goes out in fiat. So the police has been rather successful with those, just like Plus Token, remember that? Yeah, they managed to catch 7 guys from which island, I can't remember, from Pacific. They have been really successful because everyone here has to use WeChat, and everyone, you know, the money has to go from somewhere, and we are so advanced in mobile payment. So things are actually quite easy over here.
But to that note, often a lot of the money will then go through exchanges to come back out on the other end. And that is, you know, a time where it is possible to be able to work with the authorities to be able to go and track down these unsavory parties. That is something that's possible. I mean, is the whole world going to function? Like, is everyone going to be a DAO? No. So there will be interaction with some centralized parties, right?
Yeah, that's one of the reasons why
I know people
quite
who
like.
hope that you're wrong, but you're probably not wrong. Yeah, Jack, go ahead, please.
Yeah, sorry. That's one of the reasons why I actually quite like centralized exchanges, because in here we see OKX and Huobi as well got beaten down by the Chinese government, and since they're setting up their base in Hainan, it basically means that they're just surrendered, and they have to do very strict KYC. So it's super easy to actually trace the money.
Okay, guys, we have not so much time left, just from 5 to 6 minutes. I would like to, I don't know, to hear maybe a message to our viewers online, because all of them looking some kind of new perspective, how they gonna treat that DAO, how they gonna start DAOs or not, relate to your countries, relate to your position. Maybe Shen, I would like to start from you.
Sure. Just quickly, I'd like to answer Gordon's question earlier. So, I mean, I agree with you, Gordon, that there are not many instances globally of DAOs that actually registered, at least from what I know, apart from the open law, which is what they call the LAO, L-A-O. So I suggest you take a look at them, because in a lot of the DAO conferences that I've attended in the past, they have always been cited as one of the key examples of how the decentralized space is starting to merge, right? Like with some of the different jurisdictions in the world, and about how we can actually approach this phenomenon of DAOs, and how do we kind of navigate, this a lot of gray areas, because every jurisdiction has different laws. The way Kyber looks at it is that, there is the front end, like what I mentioned earlier, and there's, the blockchain. So maybe I can share with you how Kyber DAO is structured. So every KNC holder is able to, stake KNC on the Kyber DAO, interact with smart contracts, and they are able to then vote on certain key protocol parameters or decisions that guide the development of the protocol. So obviously there's an off-chain component. When the decision is made, the team or the developers of the protocol, they have to look at the decision that was decided, and they can't do it on chain, right? They have to execute and deploy whatever product later on, and execute on the decision. But at least on chain, all KNC holders that stake and deposit the tokens, they are doing it of their own accord. We don't track them in any way, and the front end can be shut. And front end wise, we actually do restrict certain jurisdictions from accessing it to be compliant. But in terms of
but why? If you're just developing the protocol, why is it restricted?
Oh, the front end. So it's like the website wise, there could be many different front ends. So kyber.org, if you take a look at it now, is our main front end. But Binance is one of our third-party staking pools that actually help their users stake and vote on their behalf. There are other exchanges as well that do it. Maybe Gate.io, we can talk after this, and you might be interested in that as well. And yeah, there are also other front ends, like just third-party websites made by the community members that just use our documentation, our smart contracts to allow people to stake and vote. So even if the kyber.org site is one day it's not available, there are many different options that might spring up the next day. So we in terms of the front end, the Kyber team, I'm not sure, like different entities of ours are based in different countries, but we definitely try to stay as compliant as possible. And we have a whole legal team that is supporting us on that front. In terms of the blockchain, like any other blockchain protocol, you can't really shut it down entirely because we are on Ethereum. So Ethereum itself as well, is very decentralized and one of the most used globally as well. So yeah, this is just a small perspective from my side.
I like your idea of creating different web interfaces and skins and leaving that to third parties. That's one of the things that happens in the US all the time is you get these warrants, what's called an in rem warrant, where a violating domain name will get seized, and it's with no notice to the opposing party. You see this a lot. Actually, it used to be for trademark infringement, but now it's for other reasons. When you have multiple ways of getting into a service, whether it's IP addresses or domains or URLs, and they're just live failover are all active all the time, but some I held in reserve. That's a good operational security measure. So I like that structure.
Perfect. Mary?
I think I'll leave you guys with this. Maybe until probably this year, some might argue last year, but I would really say this year, decentralized exchanges have not been, I'll use decentralized exchange as an example, but they haven't been very user-friendly. So there hasn't really been so much of a question about, whether we need to be able to regulate them well and stuff like that, because it's been so small. Now it's really coming up. And now also the crypto industry is actually really starting to interact with more traditional industries. And so it's bringing up a lot of new questions, but I think it's only coming up now because of all of this renewed interest, and because decentralized exchanges are becoming so important. Like I said, we're migrating towards having an AMM protocol. I think a lot of centralized exchanges are because having all of those funds on our exchange is not something really that is so beneficial for us. I think a lot of people have thought that it would be, and indeed for a lot of unsavory exchanges which use user funds to, for their own agenda, obviously it was useful for them. For us, it's more of a liability actually. And decentralized exchanges, then the users, they have to have their own accountability about their own funds. So that, I think that's why things are really coming up now. And I think that's why also regulators are really pushing things along. Obviously, we saw FATF come up last year, and I think we're going to see a lot more of progress there. Yeah, I think obviously seeing Kraken become a bank, I think was a huge step, and I'm expecting to see a lot of things come out of that.
Okay, thank you. Jack, just closing words on this discussion.
Yeah, just very quickly, like I said before, so the difference and the major difference between DAO and centralized entities is really just like, it's really like the difference between freedom and order, or so to speak, the difference between red and blue, the fight between red and blue, and this can get very political. But from my past experiences, especially since we were dealing with decentralized distributed storage, so since we're dealing with data and data transfer and data ownership, that could be a problem. And in crypto space, when you want order and the order is incentivized by profit, and that sometimes breeds catastrophe. So I'm not 100%, going for DAO and decentralization. And what I urge people is to just think about what you put your money in, and I mean, don't go completely trustless, and yeah, just do your research and see what happens.
Okay, guys, thank you everyone for attending this panel. We have to go forward, and already next speaker here in our room. God, thank you a lot. I want to say all of you goodbye with big pleasure. Gordon, Marie, Jack, Shane. Okay, see you later, and we are going to a very small break.
I'm working all over the world. Different languages, currencies, tickets, arrangements, challenges. Once I wondered, is it possible to make life more dynamic.
I'm control freak, because my business is only my responsibility.
I have a small business, but my worries are like I have a huge one. I strongly believe that only when I'm in harmony, I can teach someone to be in harmony as well.
I used to think that planning is for old fart. Over time, I realized that planning gives me freedom and opportunity to make life be as you want it to be.
Unpredictability, improvisation makes me feel alive.
When the world springs around, it's very important to find balance, like when you are dancing. Discover, investigate, make plans, earn, create harmony.
Pawns. A whole world in a couple of clicks.
Hello, everyone. We're back on Digital Summit, Global Digital Summit 2020. And on the summer session, my guest is Matthew Finestone. He is head of the business of Lure Pring. I would like to introduce yourself, Matthew. Nice to meet you here.
Thank you, Sergey. Thanks for having me, everyone. Pleasure to be here. So I'm Matthew. I run the business side of things over at Loopring. And Loopring, for those that have been in the Ethereum space for the past 3 or 4 years, would maybe recognize the name. Loopring is originally a DEX protocol, but about 1.5 years, 2 years ago, started digging very deeply into scalability research. And today we are more of a scalable exchange and payment protocol. We deployed the first ZK rollup to Ethereum 10 months ago. And so we are deep into the rollup space right now, trying to scale Ethereum securely.
Okay, perfect. Actually, to be frank, I would like to know how this scaling order book and AMM changes with Loopring's ZK rollup looks like. It will be very interesting because it's very technical. It's technically deeply things for understanding people around. I know that our audience, as well as newbies in crypto, as well as people which are somehow being exchanged, please explain for us much more understandable way.
Sure. Okay. So I guess from a high level, I mean, what we're trying to solve, like any DeFi project or any project that values decentralization, is, we want to give users 100% security at all times. Ethereum level security for their exchanging and their payments. Or as you said, let's focus on just the exchanges. Order book exchanges, like we all know from sites like Binance or Kraken, those are order book exchanges. Or AMMs are like Uniswap, where it's like a simple swap. And the problem is, as you and the audience knows, when everybody is transacting on Ethereum, the network gets very congested, right? Just like a highway that is filled with traffic, and you cannot get through unless you were to pay an absurd amount of gas fees to really, complete your transaction in a timely manner. So this whole paradigm of layer 2 scaling basically takes some transactions that would have been done on Ethereum's main highway and puts it on a bit of a fast lane, of a super highway that is still attached to the main Ethereum chain, but that has less traffic, it's wider, it's like free range. You could do things cheaply, quickly. So that is what layer 2 is trying to do, specifically though, by maintaining the complete security tied to Ethereum layer 1. It does not say, hey, come over here to this fast lane where you have to trust me, or you have to trust me and Sergey and 5 other people that hold the keys to this lane. We are only interested in keeping the complete self-custodial guarantees of Ethereum. So that's what layer 2 is concerned with. ZK rollups are one type of flavor of layer 2 scaling solution, where people go onto this fast lane and there's a new account structure there in a Merkle tree, this kind of special type of database. And then a whole bunch of things happen in this new database, this kind of gas-free environment where it's very cheap and quick to transact. And then somebody called an operator, it's a type of role in this ecosystem, aggregates all these transactions. Let's say 4,000 is like the biggest bus we could fill up, 4,000 transactions. We use a cryptographic scheme or a cryptographic, process, zero knowledge proofs. We use ZK snark proofs to say everything that happened here happened according to the protocol rules. Nothing bad happened. And I could prove that because I have this little thumbprint that says, yes, everything happened. It's like the magic of this alien cryptography, as some people like to call it, this alien math, this really, these really nice properties that say, I did a whole bunch of things. Here is the proof that it was executed faithfully. And we just submit this small proof to Ethereum. So Ethereum is saying, okay, I see that other state of the world. It's like another planet, but I know everything that's happening because of these cryptographic proofs, these validity proofs. So that is what we do, and specifically we do that for scaling exchanges, order books, and AMMs. A whole bunch of stuff happens here, but in a cryptographically, verified manner. So that's what Loopring does, and we've been live on mainnet for this version for nearly a year, almost 10 or 11 months now. Anybody could use it at loopring.io, and basically you're going to feel like you're on Binance, but you know that nothing bad could happen. Even if Loopring and myself and everybody turned evil, if we wanted to steal all your money, if we wanted to turn it over to a government, if we wanted to freeze your funds, steal your funds, whatever, it's strictly impossible. Loopring could go away or turn malicious, and funds are always secure on loopring.io because of this ZK rollup construction. So I hope that's somewhat helpful, Sergey. A bit of a long-winded thing, but that's what ZK rollups do to scale trading.
Sounds very interesting and sounds, I don't know, something magic happens. But I want to ask a question about Ethereum platform. All of us, all the Ethereum world, looking for the Ethereum 2.0. And my question is about just yesterday, they are launched testnet called Zinken. What do you think about these? What's the second for the second chance? Because last one is failed.
Yeah, that's an interesting take. I mean, very good question about ETH2. I would say that Ethereum is a great success, but that's a whole other topic. We'll need an hour for that. But yeah, I mean, look, Ethereum, why scaling is so important now is because Ethereum is so popular. So I think it's done its job, right? If Ethereum didn't have activity, then nobody would care about scaling. Scaling is so popular because it's bursting at the seams, right? Fees are through the roof. It's like trying to buy real estate in the most hot plot of land on the planet. Its prices are through the roof. You want it to be able to accommodate more people. So I'm very enthused with Ethereum's success thus far. But yes, ETH2 is a massive upgrade of the base layer, of the blockchain itself, into a sharded proof of stake system, right? So right now we're a single proof of work chain. We're going into like this sharded proof of stake environment. It's going to be very exciting. There's tons of brilliant minds working on it. And phase 0, as you saw yesterday, another testnet, Zinken, was successfully launched. So phase 0 launch should become, on mainnet, should be quite close at hand. And I'm glad you asked about this because this directly relates to rollups. As you may have seen, or the listeners may have seen, last week, Vitalik wrote a really nice blog post proposing, let's perhaps focus on a roll-up scaled or a roll-up centric Ethereum. So we're still going to go through with the Ethereum 2.0 changes, but actually, because it's phase 0, phase 1, and phase 2 over, let's say, 2 or 3 or 4 years. Phase 0 is coming imminently within the next weeks. Phase 1 is coming, I don't know, maybe 6 months after. I'm not sure the updated timelines, but basically there's a plan that we could simplify the approach. We don't have to take Ethereum 2.0 to the end of phase 2. We could kind of go to phase like 1.5, which is a bit less risky and a bit less, new. And at phase 1.5, Ethereum becomes an amazingly suitable or accommodating layer for rollups to thrive above. So instead of Ethereum 2.0 being super ambitious at the base layer with having execution going on and supporting everything, saying, why don't we just be a bit more conservative, scale up into a certain extent, but then allow these rollups to really thrive like a jungle above it, where these layer 2s will be what actually scales Ethereum to the extreme degree. So ETH2 and rollups, they're not combative or, either or, zero sum. They're really like a multiplicative effect. So ETH2, if this proposal to go to phase 1.5 instead of the full phase 2 plus rollups, we could get to 100,000 transactions per second without taking maybe undue risks. So it's really, really exciting how they interplay together.
Thank you, Matthew, for your interesting topic. Yes, I want to remind that we are being on the Emma session, but I want to remind to all of us that Ethereum starts with compromising these DAOs. Then this goes hyped on ICOs, and now this overhyped on DeFi. Guys, it's a very interesting topic. We are living in very interesting times. Matthew, my pleasure to see you, and we have to go forward. Bye-bye.
Thank you. Thanks, everyone.
I'm working all over the world. Different languages, currencies, tickets, arrangements, challenges. Once I wondered, is it possible to make life more dynamic?
I'm control freak, because my business is only my responsibility.
I have a small business, but my worries are like I have a huge one. I strongly believe that only when I'm in harmony, I can teach someone to be in harmony as well.
I used to think that planning is for old fart. Over time, I realized that planning gives me freedom and opportunity to make life be as you want it to be.
Unpredictability, improvisation makes me feel alive.
When the world springs around, it's very important to find balance, like when you are dancing. Discover, investigate, make plans, earn, create harmony.
Pawns. A whole world in a couple of clicks.
Welcome back. We'd love to remind you that we do have a closed access. It is open, but it's like very limited access to different set of events. And if you haven't been able to upgrade your ticket yet, you can do it. And you can get access to speakers like Tony Vase, Miko Matsumura, Flores San from Binance, Felix Mago, Maru Patel, Giacomo Zucco, and many, many more. And then you will have access to our awesome after parties. DAO Consensus, business community helping you to adapt to the post-coronavirus reality. Don't forget to become a member of the community. You will have access to a lot of other community events, tokens, and educational academy, and many, many more. Our moderators are going to publish the link in the comments section.
You know, we have co-organizers of this summit is Go Up Group. We have technical partner Platinum. Pons is a general partner. Forklog is general media partner. And we have special partners. They are Testamax, DeFiRex, Neomax, Neuronix, dTV and ThinkTank community, CoinsBeat, Coindar, Colibri Group, Zelwin, and Fido.
And our next speaker is Steve Semakov, the CEO and founder of HPI 3D. He's going to talk about infographical interfaces in crypto and DeFi, a very exciting topic.
Thank you. Thank you. Let me introduce myself first. I'm Steve Semakov. I'm a developer for 20 years. And I like to do new things. And I will talk to you about infographical interfaces. An example of infographical interfaces is my project called HPI, but I will talk about it a bit later. And now I will show you a little bit more about infographics. Let's start the presentation. Well, what is infographical interfaces in the crypto? In fact, it is nothing yet because there is no infographical interfaces in the crypto. I will talk about the world's first 3D wallet and DeFi aggregation UI, which is we making. And the first, actually, what is 3D? The first 3D animated movie made in the 1995. It was a famous Toy Story. I personally love it so much. The first 3D game, it may be some before. They are making 3D games, but it was not fully 3D, it's more simulational ones. But real 3D game is Quake in the 1996. But the first 3D FinTech interface is only now, and actually we are making it. And I'm not really much seeing 3D interfaces at all that is actually works. Because I don't know why, but this is the fact. There is no nice 3D interfaces for the different UIs for now. What is main advantages of 3D? We all know them. It's lighting, shadows, camera angle, nice textures that you can apply for any objects. It's flexibility and scalability because you can do everything with the object. You can show millions of another objects. It is also easy to animate objects that is 3D because in the 2D it's a bit complicated. And also it is AR, VR technology migration ready. Let's see more what is migration from 2D to 3D. It is dramatically improved quality of the picture. We all remember that actually interface is not much changing last maybe 30 years. And also, if we are seeing interfaces before, we see interfaces right now, quality is almost same. Maybe a few things changed. But look, the Super Mario game, 30 years, and what is the changes? Well, games is already 3D, and animation is already 3D, while operational systems and applications mostly are still 2D, and it is only a matter of time. Now is, by the way, the best time to enter the market. I didn't say that to you. What is about infographics? Infographics is very intuitive and up to 5 times easier to understand than traditional text, charts, and the whole info. Infographical interfaces are the same thing, but they are also interactive. When you see something in the text, you need time to understand. When you see something in the infographics, you see something that you always see in the present life, some objects that you always see. So it's much more easy to understand. And 3D infographics is even more easy to understand because 3D objects you also see every day. While design of mobile phones changing and the whole market splits between luxury and low budget devices, there is not much luxury apps that is actually will be very good for 3D applications. 3D give them luxury look because these have more graphical potential. You buy your iPhone or whatever you buy, but there is no iPhones in the world of apps. We're planning to do that. In fact, we're already doing. If you have mobile that costs 50 kilobytes, sure, you will want to have app that match this volume. Surely you will, because there is a lots of apps that actually looks crap. Let's be honest. Also, if we will talk about the crypto itself and the whole crypto market, it is very difficult and complicated for end users. They want to understand what is that. They all know that it gives some potential, but they sometimes even cannot understand the basics. It's very, very wrong. 3D infographical UIs will make it much, much more easy. Oh, there is one more. Well, I say that DeFi and the whole crypto market, something completely new. And something completely new. You need to have completely new UI because it's finance 2.0. So they cannot look same like finance 1.0. They need to look much more shiny and different. That's what 3D infographical interfaces are providing. Also, everyone knows about booming of the AR and VR now, and we're fully ready for it because take a look, some AR, VR glasses and developers who make trading apps where you're operating with fully 3D objects, you like a trading like these, and market traders are already using it, actually. You know, you just touch object, nothing more natural than this. And you also will understand, if you will look all of that, you'll understand how the 3D crypto will looks and how it feels like. That is the future of the cryptocurrencies, as I'm thinking. So infographical UIs is boosting market cap, is improving user experience. It makes the whole crypto much more close to the people. And also the status luxury apps for luxury devices. Thank you, and let me switch to the video of our application because I talk too much, I think. I will show you more. Well, let me show you what is happening here. First, exchange rates are loaded and the whole packs are loaded. This is all money, looks like real money. And now we're just dragging money to the history. You'll see the history. We can have a look more details about history and returning back. And we see the money packs again, changing the view, more familiar. We are switching from zero to the income, so we need to top up the zero account. Choosing the category, so it can be also marketplace. Choosing amount. Confirming. Here already done, transaction, and it's just topping up. Then we're switching to the transaction between two different accounts. It's a dollar account, so no currency conversion for now. We are making transaction for $500,000 already done. Then we're making currency conversion from the dollars to euro. It is loading automatically. Already done, all too much. You see the pack is very big. Let's return it back. Well, okay, there is already minus, but never mind. We're gonna make a new account now. Here we are, choosing the name and choosing the currencies and category. It is made already. Let's have a look at our new account. There is a 0, so let's top it up. We're topping up account, choosing category, choosing amount. Let's choose different amount, like say 400,000. Yeah, or in 4 millions, whatever. You see the size of the packs depends on the money amount. We can choose the menu, like any options we need. We can return to the main scan. Now we see Bitcoin accounts also. Let's top up some Bitcoins. Yeah, why not? Choosing category again. We're choosing amount. 20 millions. How much is it? Oh no, there is already 20 millions and 120 Bitcoins. No. Everybody knows it's wrong. Let's return 120 Bitcoins back. Yeah, all right. Okay, and we have returned back 120 Bitcoins. And there is a 20 million Bitcoins. A nice little pack of money, isn't it? So here we are. That was a pre-recorded view of our application, but no simulation, no pre-render. It is actual app with actual backend that is already working. Yeah. Okay, that was actually video that we pre-recorded from the early time of our development. And here is actual build that we have right now. That is based on the backend data of my good friend Ilya Churakov, and he's the consensus fund. So here we see, wait a moment. Here we see fund of itself with the $43,640. Then we see real estate fund that represents amount of the $856,000. Then we see the profit of the fund that is already having, and there is a $20,000. I think right now it's more. I need to check it later. So it is not real time, but we see the actual data that we can operate with. And next account is the user accounts, the different currencies, Bitcoins, euros, dollars. Let's, for example, move some profit from main account to the some user account, like a user one account. Let's choose maybe $1,000. And also it's going to be converted automatically. Next, in the future, we will have choice of the different conversion rates. You can choose what conversion rate you want to use. Basically, better one. And transfer. Here we are. That's what we call infographical interfaces. Once again, you see the packs of money, and the size of pack depends. Size of pack depends on the amount that we have. For instance, let's imagine that we have like already 500,000 profit, and let's move 100,000 baht, $1,000. Here we are, pack is already bigger. Or users can move money from one user account to another user account, like a 50,000 euro already. So it is already moved. The key is the simplicity. The key is that is easy because you just simply drag from one pack of money to another pack of money. I hope and very sure that fund will have profits much more than this and already having. So that was example backhand that we're using right now for you in real time. Here we are. Well, this is the end of the presentation, and I would like to thank you so much for watching it. Thanks the summit and the dear speakers also, and that was very big pleasure to share my experience and show my product for you. Thank you.
I'm working all over the world. Different languages, currencies, tickets, arrangements, challenges. Once I wondered, is it possible to make life more dynamic?
I'm control freak, because my business is only my responsibility.
I have a small business, but my worries are like I have a huge one. I strongly believe that only when I'm in harmony, I can teach someone to be in harmony as well.
I used to think that planning is for old fart. Over time, I realized that planning gives me freedom and opportunity to make life be as you want it to be.
Unpredictability, improvisation makes me feel alive.
When the world springs around, it's very important to find balance, like when you are dancing. Discover, investigate, make plans, earn, create harmony.
Pawns, a whole world in a couple of clicks.
everyone, we're back on our DeFi Global Summit, and now we have our third or second, I mean third panel, and our panelists today are Rico Peng, co-founder of FIDO Protocol, Sanctum Global Ventures. Rico, nice to meet you. Oleg Ivanov, co-founder of Berezka DAO and Crypto Bazaar, and Grigory Rybalchenko, co-founder and CEO of Emirates company. We're going to talk about, our topic is going about DeFi in various perspectives. What's your point of view? And first of all, I would like to introduce yourselves, guys, and I would like to start from Oleg Ivanov. Oleg, your turn. Yeah, if you don't mind, yes.
I was like, yeah, I'm lucky to be sitting a little bit outside of Russia at the moment and enjoying the sunset and all this stuff. But I might be there could be a problem with internet connection. So if something goes wrong, please let me know. So yeah, the topic that you raised is very big, and to be honest, I don't know where to start with. So apparently, we know that quite a lot of people from the blockchain community might remember our Crypto Bazaar, and right now, the division of that as Berezka DAO, which we started with other partners, and we're partnering with Grigory here as well, with Amiflex, and yeah. So I mean, it's a vast industry, a lot of things happening there. Some of the things already, I would say, dead. Probably they've reached.
Something really happens with the network connection. Yes, until it's fixed out. Yes, I would like to go to the Grigory Rybalchenko because Oleg already mentioned you, Emirates company. Grigory, your turn.
Hi, everyone. I'm Grigory, and I'm in crypto for the last maybe 8 years, but actively maybe 4 years. And initially, I was founder of Centralized Exchange, but then being centralized and experienced by myself all the issue with Centralized Exchange and other centralized exchange which were not kind of honest, I would say, and we were able to see this and experience on ourselves. We thought to ourselves, okay, we keep going with centralized exchange because people somehow need to change fiat to the crypto to be a gateway, a window between like fiat and crypto. But at the same time, we will develop in DeFi a lot because we want to utilize all the benefits of the DAO when the decisions are made decentralized, when there is no subjective view on the decision and everything is governed by the logic of the smart contract and all the transactions are transparent. And we are thrilled to be part of this. And indeed, we work with Oleg, we work with other partners in DeFi to make the real use case and the real usage of this DeFi technology. And myself being consultant for the last before 10 years, I'm focused on the business and how to implement the DeFi in real business case scenarios. So if, for example, people want to earn by borrowing money, so they are able to earn, and there is a clear business case. And our mission is to work to make this DeFi usable, to have real use cases for the people.
Okay, Rico, your turn. I really love your marvelous background, but what's your background in DeFi actually?
Well, we are the Avengers team in the blockchain space. A lot of heroes that we are working together to make things happen, including the panel speakers today, Grigory, and also Oleg, and of course Sergey and Catherine. A brief introduction about myself. I'm quite a new boy in the crypto space. Really got into the crypto space in 2018. But before that, I was more into corporate businesses. I was in the supply chain management, C-suite management of companies, was an ex-CEO in a public company. So I'm pretty new to this space, but thanks to my partner, my business partner, Danson Teo, who gave me a lot of guidance and told me what should the blockchain tech be used for, and of course the importance of Bitcoin in the crypto space. My partner lost 5,000 Bitcoins in a Mt. Gox hack, Dunstan. So I think a lot of people know that already. And we have been working on many projects since 2018. We also invest in quite a few fintech, AI, blockchain, biotech ventures. And lately, we are working on a number of DeFi projects, which I would be happy to share some of the insights of this interesting architecture of DeFi ventures later. Yeah.
Okay, good. Also on our panel today, we have Catherine Russ, co-host of this greatest event. Catherine, just a couple of words about DeFi, about what do you think about this stuff, about decentralization in finance industry?
That's a very great question. Thank you, Sergey. As a co-host, again, I think I don't have to speak on that, or probably as a journalist might not be a greatest idea to sort of speak on that. But I do, if you don't mind, I do have several questions to our speakers and panelists, because this is the DeFi panel, right? And it's like an ongoing topic all over the crypto space and Twitter in particularly. I'd love to hear from you guys. What do you personally think about DeFi as a new step in the industry? Are you like pro DeFi or anti DeFi? What side are you on? Let's start like maybe Rico. What do you think?
Well, I am definitely a pro DeFi. Definitely a pro because since I got involved in the space, we have been looking into a lot of ventures that actually bring more freedom to people. And looking at the current old traditional financial system, it's so centralized that we're not able to do anything out of the box, out of the framework. And that is primarily a main problem. And which is why when Bitcoin was launched and we saw that, if there's only one global currency, it should be Bitcoin that we should be working on towards. But again, with the current blockchain in the whole world, none of them are actually ready to do the sort of transactions volume, scalability that is needed by everyone, especially enterprises standard. So there's a lot of work that needs to be done. And DeFi as architecture for the future financial system is definitely the thing that everyone is trying to do something innovating towards that direction. And I think there are a lot of good projects out there that we should support.
Okay, perfect. I'll like, are you with us again? Do you have a good reception?
Yeah, let me give it a try. Do you guys hear?
Yeah.
Yes, I hear you now.
Hopefully. Okay, so what is your stance on DeFi? Maybe not.
Yeah.
Maybe
Thanks.
not.
Yeah, it's I enjoyed reading, especially.
We're losing you a little bit. I think. A little bit.
Yeah. So it's not working, right?
So, I'd say.
Right. Okay. Yeah. Let me try to say that. Yeah. I mean, I really enjoyed your question because connecting a panel of people who work in DeFi and asking a question, what's your opinion about DeFi, negative or positive, it's a little bit skewed, right? I mean, you wouldn't really hear anything negative. I would expect from the people in the panel here anyway. But just a couple of comments, if again the connection would allow me. In my opinion, again, coming from the investment perspective here, right? If we look into blockchain a little bit broader, from like back in 2016, 17, we've all witnessed several waves of let's say, different trends that were happening within blockchain, right? So first we had all the protocol era, right? When everybody was trying to create another Ethereum killer, a faster, cheaper blockchain protocol and whatever else. Then there was the wave of creating crypto, fiat exchanges, wallets, and whatever. Then there was a wave of exchanges and crypto funds. Then we had gaming and gambling, which never took off. So right now, in this sense, DeFi is one of those trends that, it did happen. It did actually find some fundamental.
We're losing Oleg.
You guys hear me, or it's very bad?
Go on.
Yeah, I hope it makes at least some sense. No.
Well, to your question about like why I'm asking this in the first place, it's one thing to work in the space, but the second, an entirely different thing is to what you actually think about it and what sort of aspects you have working in it. Like I work in media, like in crypto media, so I'm pro facts, but I'm anti fake news, right? You know what I'm saying? And
got it.
Yeah,
No, I got it. Yeah,
working in,
it's a big difference. Yeah.
Yeah, and working in the space, like the previous speakers mentioned today, that you can work in a DeFi space, but legally, what would that mean, right? So there are like different aspects and layers of that. So, and maybe
let me just throw like a couple of things which I think are very important for the DeFi industry. So basically, this is just a combination of two things which already existed, and they merged in DeFi. So number one, it's basically a version of your fintech company, right, or fintech industry. So basically, your technological solutions to banking system applied on blockchain. So pretty much everything that we can see in fintech can be, little by little, introduced in blockchain within DeFi or whatever we call it, as one part. Second part, which is also important, is if we look fundamentally, who is the main client, who is the main user, we're basically saying that these are the same products that are used by your everyday trader on your centralized exchanges. Leverages, trading, liquidity provision, arbitrage, whatever else. So these are the guys who are, got a little bit sick of centralized exchanges, exactly what Grigory was mentioning. You see all this undercover deals, the flash crashes, the limits on withdrawals, the constant repetition of KYCs and all these things. And you understand that as a trader, as a person who manages some funds, you are vulnerable when you deal with centralized exchanges. So that's why partially, step by step, you move to these decentralized solutions, which will provide you exactly the same services, but then with some additions. So if we look into this perspective, then what we need to measure is pretty much two numbers. One of them is basically one measurement, right, is your daily trading volumes. So within all the centralized exchanges, we have the daily trading volumes of about $90 billion daily. In centralized exchanges, it's about, I think it's about 450 million only. So only here we have about, what is it, like 108?
Okay, check. Are you with us? Lacking very much. We probably lost you.
Is this any good? All right. Got you. I guess let's just move on to somebody else. Yeah.
And Gregory, back to you. Maybe like what's your stance on it? Like, do you see any problems, issues with working at a DeFi space? And I do have a follow-up question already.
Thank you, Catherine. And of course, I'm pro and DeFi. Actually, what we have today, this is what was created like 10 years ago when idea of Bitcoin, it was alternative to the centralized finance, right? And then Ethereum came with the smart contracts and virtual machine, and it was an alternative to all the businesses. The problem that it took time to the people and to the community to create the solutions. And like, I think Bancor in 2017, they started decentralized exchange, and they were first who were made a bet and tried to create the solution. It was not like widely accepted at that time, but since like 2017, more and more solutions were appearing, and now as said, if you look at the volumes of decentralized exchanges, this is exactly the indicator that DeFi is widely accepted by people and widely appreciated, because the volumes on decentralized exchanges are growing much more higher than on centralized exchanges. And if you look at the statistics, I will not go to details, but it is very obvious. And coming to your question, what problems we have, and it was my presentation today when I was saying about TrueDAO, the concept of TrueDAO, which EmiSwap and EmiDAO presents. And the problems are that the current smart contracts for the DeFi solutions could be changed because they have proxy level and then background smart contract which could be changed. So it is still centralization happens. And also profit from decentralized protocols goes to not to the community, decentralized community, but mostly to the one who created this protocol. And the last one is a governance. It's not like really decentralized governance, it's governance by someone who created the protocol. And I think the trend now will be building true DAOs when the community who holds the tokens, they make a decision how the protocols are being evolved and they get the profits out of the protocols.
Well, that's...
You know, guys, Catherine, yes, if you don't mind, yes, I would like to ask one question to the Rico. As I aware, he involved in two companies. One of them is Zelvin, and another one is Allwin. And I know that that company Allwin is impossible that do the company on the DeFi where all the winners. I would like to understand how it looks like and what's the business inside.
Well, I very quickly, because I know we are short of time, I'm working closely with Nikolai on the Zelvin platform, which is an e-commerce platform on blockchain. And we also launched a platform, gaming platform called Allwin. Pretty much it's about winning and farming at the same time, playing games while making money. So that's why it's Allwin for everyone if you're participating in it.
Okay, perfect. Perfect. And in your point of view, where is DeFi used in that platform? Gambling, yes, I see. The gaming as well. Where is DeFi? How is yield farming ongoing?
Well, yield farming is ongoing because of the structure that is being involved in the DeFi structure of this platform. And getting people involved by inviting your friends socially and getting everyone involved in this gaming actually adds on to the whole farming side of the DeFi. So it actually creates a liquidity pool that can be benefiting for the whole community. And that's through a decentralized model.
Okay, now I got your background. It looks like very pretty and cool, like that Allwin platform. Is this? Catherine, now your turn. Yes, I'm sorry for interrupting you because for me it's very interesting what's going on that side.
For sure. I mean, we have to differentiate a little bit between like DeFi products and decentralized exchanges that we've mentioned here. I think that the previous panel, the people there were much more realistic, I would say, in their opinions, and saying that you probably shouldn't, or I believe the model was like you have to have your assets stored at a centralized exchange, 80% of your assets, and then 10% on decentralized exchanges. And you know why? Because you cannot get them back in case they're hacked, and 10% of your assets elsewhere. I'm sorry, pardon me, 80% on cold wallet or cold storage. That was 80% not centralized, and 10 on centralized and 10 on decentralized. So and in here we have like a very optimistic panel. So what would you say to that? That it's like to the idea that it's not that safe. And I mean, it's great in theory, right? And the concept is great, but the idea is that you can lose your money altogether and never see them again. What would you say to that point of view? Seriously, that was the previous panel, not my opinion. So what would you say to that?
I think Rico have to be silent because not all the win. And we have to go forward to the Oleg. Oleg, just your turn.
I'm interested in what I like.
Yeah, let me try my connection again. So, see, every time when we move into some financial advice in terms of how you should manage your own money, it's a little bit tricky, right? Because what you really deal with is, number one, you deal with people at different stages of their development, and you know the amount of money that they manage. So because some people might be sitting in a stage where they are just making, I mean, they're just at the stage of accumulating their wealth. So that's why they have to take more risk, right? Because otherwise, if they just put their money into some traditional banks deposits, they would never accumulate this wealth. So that's why you would have a whole different set of advice to them versus those who would actually have some wealth and are at the stage of protecting it. So that's why I'm a little bit cautious in giving advice, like general advice to everybody. But to your point in terms of security, we should all understand that apparently everything that is not claimable and protected in courts is at risk. And whether it be the technological issue, like with blockchain, that there is, or that DeFi, where there's no legal framework, right? So there's no enforcement, let's say, if something goes wrong. Or there's a situation like we have, in countries, in some countries with Russian-speaking language, let's put it this way, where the court system is just not working at all in general. So even if you, I have my own case where somebody stole about 500,000 rubles from my Sberbank online account. Basically just hacked it, reissued my SIM card, and just the money was moved.
I'm sorry.
It took.
You said someone stole it. Just disagreed a bit. Someone stole, or like the government?
Yeah. So it was. Yeah. So no. Basically, yeah. I had a Sberbank account, right? So during the night, somebody reissued my SIM card, installed it in a different phone, and just somehow got access to my Sberbank online, and 500,000 rubles just evaporated. So basically, it was transferred to somebody else. It took me 2.5 years and about the same amount of money to.
I guess
operators, bank, and everybody else get. Yeah. So am I back? Sorry.
Lost you on the most.
So basically,
that's unfair.
I know. I know. I'm sorry. So basically, 2 years and a half down the road, I got my money back with lots of investments in the legal procedure. So basically, I spent probably more money on the attorneys than just the the money that I lost with the system. So here's your banking system with legal framework, and here's the DeFi, and this the system might not work either way. So it's a little bit tricky to get.
Okay, guys. Yes, yeah. We have to go forward. Yes, maybe Rico, from your comments, or from Grigory.
I would agree with the previous panelist, and the reason is because you need to understand why you keep money on centralized or decentralized exchange. If you just store, it's obvious that everything that you own is more secure than either centralized or decentralized exchange, because in terms of, like, if it is centralized, then somebody is having all the control to your money. If it is decentralized, there is a risk of hacking, because there could be some gaps in the protocol. But the exchanges or DeFi protocols, the purpose is to convert money or invest money or supply liquidity to get profits. And there is a risk-reward ratio, which is used in traditional finance. So if there is no need for you to invest in something, but just purely store your money, of course it is more safer because the risk reward is much more better when you keep your money at your own private account with a MetaMask or Trezor or whatever. But if you want to earn with this money, then you need to calculate this risk reward ratio. So I would like to emphasize even that if you don't need to do any transaction, keep 100% with your own accounts.
Okay, guys, we have to finalize today's this panel, and just not last but least, a comment from your side to our audience. Rico, maybe we can start from you.
Well, I just like to comment on the previous question. I keep actually 30% of my cryptos in cold storage, 50% into investment. So, for my company's crypto account, we have multi-sig. So pretty much it's pretty secure anyway. And I would say it's a time where you should invest more and keep some money for safety and emergency use, whether it's fiat or crypto. But I think you should start transferring your assets from traditional assets to crypto assets, especially post-COVID-19 and moving forward in the next couple of years, Bitcoin and many other cryptos, value is going to rise pretty significantly. So that will be my advice for everyone. Thank you.
Perfect. Oleg, do we have a chance to listen to you? Let's try to.
Do you guys hear me?
Yes.
Go for it.
Yeah, thanks guys. So yeah, if we talk about proportions, I would tell you this. Surprisingly, I have zero money on bank accounts. So like 0 rubles in traditional banks. So all of my money is in crypto, like everything, 100%. I would say about 30% of that is in different forms of multi-signature wallets, but nothing in cold storage. So basically, I believe this is a higher protection than your cold wallet, which can be lost. And then the 70% is exactly what Gregory said. So basically, if I want to keep my stable coins and they're sitting somewhere, so why not using them in some very, very manageable solutions where I don't carry the risk for the investment body, right? So basically for the stable coins as such, and then earn something on top of that and risk on that earnings, right? With the volatility of whatever I get on yield farming or whatever else. So that's the model that I'm using, pretty much the last year. So yeah.
Perfect. Grigory, what's the true DeFi is on your perspective?
The true DeFi, it is when the decentralized community have the governance of the protocol and they share the profit out of this protocol.
Perfect. I think, yes, we can summarize today's event. Catherine, you have to add something. Ale,
I would disagree a little bit because I think sometimes we're missing DeFi and DAO. So DeFi might be centrally controlled, but DAO, decentralized organizations, definitely cannot be centrally controlled. So a combination of these two can then, lead to what exactly. But again, DeFi, all the earnings have to be redistributed.
Okay, unfortunately, yes, I'm going to disagree with Oleg. Concerned to do DAOs because all of them have to be somehow, being conducted, being treated on, being somehow pushed out because this is too much and this is too hard to, to make business on that way. Catherine, maybe last but not least word to summarize this event and go to the next topic.
I just wanted to say thank you guys for joining us today and for this discussion. It's pretty great to hear different opinions, and I hope that this is another step toward decentralization and or a better society that we'll live in.
Okay, perfect. I want to thank to all of you. My pleasure to have today Grigory, Oleg, Rico. Guys, see you a bit later. I want to say goodbye, and we have to go for a very small break.
I'm working all over the world. Different languages, currencies, tickets, arrangements, challenges. Once I wondered, is it possible to make life more dynamic?
I'm control freak. Because my business is only my responsibility.
I have a small business, but my worries are like I have a huge one. I strongly believe that only when I'm in harmony, I can teach someone to be in harmony as well.
I used to think that planning is for old fart. Over time, I realized that planning gives me freedom and opportunity to make life be as you want it to be.
Unpredictability, improvisation makes me feel alive.
When the world springs around, it's very important to find balance, like when you are dancing. Discover, investigate, make plans, earn, create harmony.
Pawns. A whole world in a couple of clicks.
Hello, everyone. We are back on our Decentralized Summit, DeFi Summit on DAO Consensus, and I am with big pleasure, want to introduce you, Ilya Churakov, CEO of DAO Consensus. My pleasure to have you today. I want to remind that he is organizer of this biggest event. Ilya, you are welcome on the stage.
Yes, thank you very much. I'm really glad to meet all of you and connect to you personally. And I'm really glad to our host for such a great energy and atmosphere that we have here on Summit. So let's go forward, my dear friends. We are almost at the end of the first day of the summit. And right now I will do for you a short presentation, like what is DAO consensus is about, for what actually we are doing all of this. And first of all, of course, I would like to welcome you to our international business community. It's a completely new way of doing community, of the new way of the collaboration of the different people, companies that can give us a new potential of profit that we will have right now, actually. So just in a few words, like what we see right now generally in the world, like we see like two potential different ways of like future, actually. Like from one side we have something really scary one, like a cyberpunk total technology, you know, and another one we have kind of eco-techno life, which is something completely like great that might be with us actually very soon. And we are in the DAO consensus, we are more focused to build this kind of like eco-techno life. And when we started to think about this, like how it can be, how this, like, you know, we see this sometimes in the movies, like a future, something like, you know, like a great planet in the future where is everything very good. So, and here we understood that we can manage this actually right now, and it's in our hands to build this global community, and from this global community build even our like future village, our future city, not like in different types in the world. So, and from this one we started to to make a discussion about this, how it like might be, how we can organize this, and we understood that the main important is, first of all, how we can manage community. And we thought about that community as a technology, how it might be. And for right now, what we can see that we're joining now in the era of social platforms. We see like everybody was this, how is famous like YouTube vloggers, how much money do they get paid? And this is something like new world what is changing right now. And we started to think like the community of tomorrow, what it might be. So, and for as an answer for this one, we understood that this is like from one side, it's a ecosystem that connect people through global, through internet from one side. From another side, it's a system that can help to make profit from our like potential events, products, everything what's going on in the community. And this is something that can give each member of the community potential to realize his skills, to grow up his own project, to build a network that is really good for this person. And the answer is for all of this, actually right now, it's this DAO consensus. DAO consensus, this is the community of the future, community of tomorrow, that you can have it already right now, and you're almost already here, you know. So, and what's going on here, like we will discuss you, I will explain you a little bit in a more details, in a more technical side, how we are doing this right now, how you can participate, how you can make profit with this one, and how we just can generally have a good time together. So what we did, first of all, we understood that we need to have a basic infrastructure that helps us to connect, to promote your skills, to promote different products that really we really like inside of the DAO. And the answer is that what you can see on the screen, that we built this like actually almost right now it's a huge infrastructure. So we have inside of this a social network system. We have an affiliate marketplace. It's a system which help us to connect all the profits that's going on inside of the DAO with the all members of the DAO. Can you imagine, like right now what's going on, like almost in every product that you can like buy in the everywhere, like almost 40 to 50% of the price it's a marketing. It's a marketing price to promote this product. And inside of the DAO, we're taking this part and give it back to our members. So in every purchase that will be in the DAO, all of the network can have profit from this one. The next, what's very important, it's like exactly like a DAO model as a decentralized autonomous organization. And right now you see like how it's growing up, this decentralized finance world, and DAO is like in the center of this one, how to organize this. So, and we're doing exactly this model. So inside of the DAO, we have a special token. It's a token which provides you a special possibility to vote for any decisions. And we heard already a lot from previous speakers today that everybody told that it's something like that it should work in this way. So we realized this already in this DAO consensus. So in this token, it gives you a possibility to vote. In another part, it gives you a possibility to have a dividends from the whole profit that generated in DAO. And this one that we have on a DAO special platform, that everything is transparent. You can see what's going on, what's like the votings, everything is absolutely transparent here. So next one, we built a DAO accelerator system. So it's a special education system which helps you to understand how to make directly to you profit in this DeFi world, and how to find the best solution for you. And accelerator will help you. And actually right now, after this summit, all the content that will be generated on this summit will be inside of this DAO accelerator. And for you, of course, it might be too much information like at once, if you're like 8 hours as our hosts together, like all the content, it might be too much. But especially in the DAO accelerator, you can go and check all the necessary content that you need more. And so for this one, you can join right now inside of the DAO, inside of the DAO accelerator, to have all the records of this summit, and of course to join DAO, to have a token of the DAO, to have access to all the infrastructure, and to start build your network, start to build your profit inside of this new DAO possibilities, in new DAO infrastructure. Of course, also we understood that we need to have a regular online events, and right now you're exactly on this kind of event, and they're going to be regularly. So next one will be 1st to 4th December. So please take attention on this one. There will be the whole summaries of the year, and there will be a whole ideas what's going to be next year, 2021. So this will be something very exciting, 1st to 4th December, next summit. And of course, right now we're building a real village. Like right now we have a land, we borrowed the land, and we're preparing now a village. So we will have a live parties, live meetings, meetups. Very soon, hopefully in like several months, we will prepare everything, and you will have possibility to even come to this place and meet personally with each other. So this is all the infrastructure of DAO community, everything that you can have here inside. And this is something completely new that can bring a lot of possibility to all of us. Here is like just some screens about this marketplace, Aragon ecosystem, like our accelerator courses, online events, Future Village. We have a very good party time, as you can see on the screen. And this one is only beginning. So DAO as a business community can provide you a lot of interesting profits, networking, technologies that we are bringing to you right now. So you can join right now, go to our website, daoconsensus.com, and have a look about the projects. We have a pretty like for my personal opinion, like one of the best experts in the world right now that provides you a very high quality, like world-class quality of the content. And we are hope to grow up this expert community that helps you to go forward. But okay, so like sounds very good, but what it can be like for you personally? And for you personally, we understood that right now we have several types of members who is coming right now. So one person is a person who is just watching for job, some like post-coronavirus adoption, find a way where to make money. Another person is person who more focused on building networks, like in the different companies, or building networks of subscribers in the different medias. They're also very interesting to make profit in this new community, new technologies. Of course, entrepreneurs who we have here a lot of today interesting interviews. And for these interviews, these businesses that provides very good services, and we are very glad that they're joining a summit. And we will show you in the next step, like the real cases, like real results of the clients of this business, how these businesses are growing up. And of course, we are like going to negotiate with these businesses so they will provide their like potential works, like potential, like everything what's going on with them. And of course, experts who wants to like to share their experience, to have a good communication network. So this is everything, like this main group that can be inside of the DAO right now. And for each of this group, we have a special offer right now that you can come inside of the DAO and have a profit for you. For networker, you can build your network and make profit from the whole products that will be inside of the DAO. For entrepreneur, you can develop your project. You can promote this project inside of the DAO community. So this is actually like what we're doing on this summit and so on. So expert, you can promote your skills, you can promote your knowledge, you can make a special courses inside of the system, and we will help you to provide all the necessary information to the audience. So guys, right now, it's a potential great possibility to you to join DAO Consensus, to have a great content, to have a great possibility to make profit, to have a great possibility to join very good online live events, and of course, have a great chance to run this DeFi world and make a great profit for you, for your families, for your friends. So we welcome all of you to join DAO community. And right now you will have a link in the comments. Through this link, you can go and you can join DAO community. You can have access to all the videos from the summit, all the courses that we have. You can have access to tokens of the DAO. You will have access to special community of the people who is inside of the DAO. So everything, this one is inside. So you're welcome, and see you on the next event. See you tomorrow, actually, like with the but tomorrow we will have event only for users, only for our DAO members. So actually right now you have a last chance to join, and tomorrow continue inside of the DAO, inside of the community, and start to build your profit right now. Okay, thank you very much. Thank you for your time. And it was very nice to connect with you to make this presentation. And I will give a word to our hosts.
Yes, thank you, Ilya. I want to remind to all of you, Ilya Churakov, CEO of DAO Consensus and organizer of this greatest event. Thank you, Ilya. Nice to meet you here. Yes, my pleasure. With big pleasure, I want to say you goodbye, and we have to go forward. We are going forward to our next speaker, and it's Dan Homenko, co-founder of Platinum QDAO Engineering, and we will meet him very soon.
Hello, guys, and thank you very much for having me today. It's my pleasure to be here, and it's such a privilege to see so many excellent professionals in one place speaking about a whole bunch of different topics. My name is Daniel Kamenko, and I'm one of the co-founders of the largest Asian consulting group called Platinum.Fund. Platinum.Fund has been in the market for more than 6 years, and we served more than 500 large-scale customers from a variety of different industries. We're very proud for our efficiency and quality we provided to our customers. No complaints so far, which is good. My experience, I'm from the financial background, worked in the banking industry and worked for a government here in Australia, and decided to get into the IT industry, learn more about blockchain. And now what we're seeing is a very interesting trend being established in the market in the blockchain industry called Decentralized Finance, DeFi. I think this industry that is currently growing, despite the fact it's currently falling because of the price of many DeFi coins, is more than it falls more than 90% actually. Despite that, we're not speculators. We're not here to talk about prices. We're here to talk about the future of that industry. We're here to talk about the potentials, the prospects, disadvantages, strengths, and weaknesses. And I think DeFi is at the very early stage when it's kind of forming its future. We don't know what's going to happen, but I'm sure decentralized finance is here to stay, and it will definitely prosper eventually. What I want to talk today about is a couple of things related to the DeFi industry. I've split it different topics, covering some main points from DeFi, and I want to discuss them with you. As the person who's been testing many DeFi services in the last 6 months, I can tell you it's a very risky industry. There are a lot of problems happening right now, and the problems are coming from the fact that many scammy people are taking advantage of this newly established phenomenon called DeFi. What people do is they fork well-known projects, and they set it up in a way that will benefit them, not people that are going to use the platform. The clear example was recently when we see some projects forking SushiSwap or Uniswap or a whole bunch of other forks and not establishing time lock properly, which allows people who are the developers behind the scenes to issue unlimited number of tokens and pour them into the liquidity pool to take away Ethereum or anyone else's assets of the real value. In this case, the token price will drop to almost zero. There is no doubt about that. And regular holders aren't able to do anything about it. And the reason why is because there is no time lock. No time lock is a big problem, because what can happen is pull rug, as we call it. IT people, we call it pull rug. When you pull it, like with the whole liquidity towards yourself, and you're stealing money from people. The time lock serves an extra layer of protection for people, which is important to have it, and many companies have to consider it very seriously, because it gives 48 hours for people to feel peace of mind, to have safety in place, that if there are any changes implemented within that protocol, there are 48 hours for people to withdraw their funds safely with no problems. The second biggest issue that we recently saw was that not many people, especially developers and project owners, are caring about audits. Audits, smart contract audits, is an essential part of any project. If you don't care about your protocol, most likely this protocol will be hacked and people will lose money. If you don't care about your users and customers, don't even touch DeFi. Because as a developer, you carry on responsibility for your users, you carry on responsibility for your customers. It's the same if you're walking into the shop and you don't have any security in place. Anyone can steal money from that shop and you can't do much about it. The same fact that audits are serving a single purpose. They're auditing, they're checking your smart contract for any weaknesses that you as a developer has to fix. If you don't care about safety, that's the big problem. So there are a whole bunch of different good smart contract audit companies, and they do an excellent job, I think. But keep in mind that most of those companies sometimes are very strict with their requirements. Many of them are doing smart contract audits for just regular, ordinary companies. They do only well-known companies, or they care about their own reputation. There are some low standard or low quality smart contract audit companies. All they care about is they obviously wanting to make money out of you, and they don't really care about smart contract audits. So they don't really check things properly. So make sure you choose the right company to get the best to get the best customer service from this company. The third main problem that we see in the DeFi industry is the cost of gas, fees. Fees currently are tremendous. You look at the Ethereum network, I mean, I really pay a lot of money for those gas fees, and I wasn't happy about it. You know, when you use services like SushiSwap or SpaceSwap or Pickle, some well-known DeFi projects, you pay a lot of money to do the harvesting. You pay a lot of money to do the harvesting. If you don't stake too many LP tokens and you don't earn too much through the harvesting, it will cost you a fortune to withdraw these funds. I mean, what's the point of me earning, let's say, $5 if the gas fee will cost me $6? It doesn't make sense mathematically. So make sure you do the proper harvesting. You don't rush to harvest your coins from any project. You have to do some calculations and make sure you've got enough profit sitting in this harvesting to withdraw those funds and not losing too much money using gas payments. When we see projects in the DeFi industry, sometimes and often, you see projects are trying to copy each other, but they don't really care about the tokenomics. The best example I saw was SushiSwap. I mean, the idea was excellent to suck out the liquidity from Uniswap and create a competitor that will compete with the decentralized exchange platform against Uniswap and offering some extraordinary options that Uniswap didn't have, because at that point of time, Uniswap didn't have their own token, while SushiSwap had their own token, and it was quite popular. What happened was SushiSwap took out massive liquidity out of Uniswap, and we saw this $800 million coming out of Uniswap going to SushiSwap via the LP tokens, and we see a big popularity in the SushiSwap protocol. But what happened next was simple. SushiSwap had a very irrational and not logical tokenomics in place, because they've been giving 1,000 tokens per reward block. And as we all know, every single day we have almost 6,155 blocks being mined on the Ethereum network. So you can imagine how many tokens are being mined every single day. If you times 6,155 blocks times 1,000 tokens, you've got a huge emission coming on the market every single day. And it's going to be a very naive thing to think that those tokens will not get dumped. They will, and people will take an advantage of it. That's why the price is going down constantly, and it's almost 60 or 70 cents right now, coming from the top when it was almost $6. That's the problem. I mean, projects have to care about their own tokenomics. If you rush, if you just fork something that is popular, it does not guarantee the success of your project. You have to check it. You have to do the tokenomics. You have to do the logical thing behind it. And I think many projects, if they do care, they succeed. And we saw many examples, as I said before, SpaceSwap, Pico, and some others that actually succeed, and their coin is going up despite the fact that the market is going down. Many problems we see when it comes to one-day projects. I mean, people, when they come to the market, like back to the ICO days, when we saw a project full of enthusiasts, developers, and marketing specialists, and they think they will take over the world. They think they are making a fork that will become super popular and it will take over the competitors. But it's not going to happen, because it's considered to be a one-day project. If you just copy something and you don't think about the idea behind it, how to improve it, what are the additional features you can add, what are the additional things that can make people excited, nobody's going to use your project. That's very simple and straightforward. The biggest issue is to build the community. Community are not dumb. Community is a very smart, it's a very comprehensive substance that will follow the idea. That idea that requires you to think as a project owner. And if you don't think, don't expect a community to come to you. I would love to use today one of the projects. It's not as big as, for example, Sushi Swap, but it's kind of getting very popular now in Japan and Korea, called Space Swap. I mean, the Space Swap, it's an aggregator, and what it looks like, it's aggregating the best possible DeFi services from the entire DeFi industry. The first product they've recently launched, and I did use it myself as well, was farming, just but the idea behind the yield farming is quite extraordinary. You don't just farm the coins and you sell it. There is a particular reason you can hold those coins, and those reasons are the following. You can do the voting. It's a governance token, so you can actually do the proper voting, and the voting is happening on the platform. They don't just use it as an excuse for people to hold milk coins, but they are using it properly, and people vote. That's excellent. The second thing that excites me about this project is that it has a strict tokenomics. Every 10 to 20,000 blocks, the reward number of tokens in the reward block goes down. And as initially it was 40, went down to 20. Now it's, I think, 10, and it will eventually go down to 2. That creates less emission on the market. That creates a value behind the token, because obviously people that are mining or harvesting those tokens know that the market won't dump too many tokens on the market, and they can safely store those tokens, expecting the price of this coin to go up. But the trickiest part in this system, and the most exciting part, is the blender. It's the blender that creates a very unique coin called Shake Coin. And that coin always grows in price with the ratio towards the actual governance token. So that Space Swap project made it very smart. What they've done is you mine the milk coins. Yeah. When you mine the milk coins, you have two options: either hold them or sell them. And this is what you do with many other projects, Pico, Sushi Swap, and Sake and Sushi Sashimi, a whole bunch of others. But they've done it in a way that they motivate you, instead of selling milk coins, swap it to Shake Coin. And the Shake Coin is so limited because it only has a mission of 10,000 coins. And so far, only 300 have been mined, that this coin has a perfect sense of storing your assets into this coin, because it's so stable, it's not overwhelming on the market, and it's small when it comes to the number of emission. So people can actually store their value in these coins. And this is what's happening so far. The coin was $300, now it's almost $900, and it's steadily going up. Nobody wants to sell it because it's a perfect asset to hold, and hold it in a way of keeping your value up despite the market goes down. The last thing that I want to touch with you today is NFT tokens, non-fungible tokens. And that's the perfect example how smart people are tokenizing their antique artwork or any other thing on the market into the NFT space. The best example and the easiest example, CryptoKitties, and we saw some Lego style NFTs, many others. But what excites me about NFT is not CryptoKitties. What excites me about NFT is its potential, because NFT is attached to a particular asset or a particular intellectual property. And it really creates sense of people using this token to store their valuable physical assets into the virtual space. Imagine you have a Ferrari and you can create NFT token attached to the value of this Ferrari. You know that this NFT token is unique, it's a collectible item, and you can sell it or you can keep it, but it's always in the virtual space no matter what. And that creates transparency, that creates some sort of trust towards your asset. The people know who are buying in that if they're buying this NFT token, they're buying a value of Ferrari. And that's what many people use right now. They use NFT tokens in the artwork space, put a painting, and this painting can be split it into 1,000 NFT tokens. Anyone who purchases an NFT token will be the owner of that painting. And that makes perfect sense if you want to monetize your physical assets. Tokenization will simplify asset management without an intermediary. We know it. It's going to happen. Centralization will go away. Everyone is sick of centralization. Somebody controls something. I mean, why? People are living in the 21st century. Soon we'll have to say 22nd century. And we are moving towards the decentralization. People want more transparency. People do not want to see corruption. People do not want to see bribing or anything like that. And I think DeFi and decentralization will eventually take over. All of those centralized exchanges are accepting the fact that decentralized exchanges will take them over very soon if the gas fees problem will be moved away and if some extra layers of protection will be announced. So we know that the world of blockchain is moving towards the progress. It's non-stoppable, it's unstoppable machine. It will progress, it will be developed further, and there will be some exciting projects coming on the whole bunch of different blockchains, not just Ethereum, but also Polkadot or Cardano and the others. And we are looking forward to see this progress. Thank you very much for having me today. It was my pleasure to be with you guys, and I'm looking forward to the next session with you. All the best, good luck, and make sure you keep your assets safe. Do not fall into the scammy Ponzi schemes, and keep it very cold when you're investing. Do not set your mind in a way of speculation, and do not be greedy. Always take profits on time. I'm not a financial advisor. This is just a friendly advice. Thank you so much. Take care.
Ladies and gentlemen, we are still online with this on this final line of today's Digital Finance Summit. But before this end, I would like to take your attention on today's publication in largest news media with 100 million unique readers. I'm talking about Independent UK. You see on your screens, comes out with disruptive headline. Cryptocurrency has the power to revolutionize a corrupt banking system, edited by Alexander Lebedev, headliner of this conference. By the way, don't miss the opening speech of his speech tomorrow, but I would like to give a word to the Catherine. Catherine, try to close the conference in a much good way as you can.
Thank you. I'll do my best. So first of all, thank you for taking time and watching us today. This is the end of the first day, but we have 3 more days to go. And before we're going to inform you of what's going to happen over the next 3 days, which is like a very exciting agenda, I would like to remind you of who we've had today as speakers and panelists. So we've met and talked to Grigory Rybalchenko, Cynthia Wu, Rachel Lin, panel discussion including Nate Hidman, George Sebastio, Shen Lau, Jordan Weil, Kyle Chasey, Kyle Chassé. Sorry, that was wrong. Another panel discussion including Jack G, Maria Tabuyet, Shane Hung, Gordon Einstein, Matthew Feinstone, Steve Semakov. Another panel discussion including and featuring speakers as Rico Pan, Oleg Ivanov, Grigory Rybalchenko, and other speakers like Ilya Churikov, Dan Kamenko, and I'm sure it was as informative for you as it was for us.
Okay, guys, tomorrow gonna be the greatest day. Not than today. It's gonna be very interesting for our view customers, for our users which are buying the tickets on the DAO Consensus Summit. Is going to be under the closed doors, and it's going to be start from Alexander Lebedev, then go to Miko Matsumura, Ilya Churakov. We're expecting panel discussion with Tony Vase, Jean Miao, with me, with Muru Patel. Then we go forward with a keynote with Flora-san, Felix Mago, Meher Chobba, another panel discussion with Felix Xu, Yemuk Xu, Rahan Jera, Maureen Bechmed, and the keynotes with Giacomo Zucco, Neil Gallard, Vidjet Lichka, and Anton Bukov. I want to remind you that for being participate on tomorrow's event, when everything included, you have all the chances to do your update of your tickets now and go on the next event going to be on tomorrow. Now all your updates shown behind this screen. You can do it now.
And the organizers of the summit is DAO Consensus, and it is a business community that helps people adapt to the post-coronavirus reality. Don't forget to take and claim your membership, and you will be exposed to a lot more exclusive and great content, event communities, and educational academy. Our moderators will be publishing the link to the community in the comments section.
Co-organizers of this summit are Go Up Group. Technical partner is Platinum. General partner Pons. General media partner is Forklog. And special partners are Tesla Max, DeFirex, Neomax, Neuronix, dTV and ThinkTank Community, Coinsbeat, Coindar, Colibri Group, Zelvin, and Fido.
And it's actually, we have a lot more of announcement to come. And one of the most exciting is that at the end of the year, we are expecting to host another summit on the results of the 2020. We're going to be talking about the developments in the industry, the ups and downs that we've seen this year. And we'll also be discussing and hoping for the better future in 2021.
Perfect. You know, Catherine, I expect the after party of this party is already done. Yes, we can close it at this moment, but I have a question to you. What do you think about this summit? What do you think about all this stuff? DeFi, DAOs, I have mentioned at least 2 times about decentralized media, about dTV. You are, as a person which are working for media, I'm eager to know what's your thoughts about all this stuff.
Well, thank you for asking. Well, that's a tough question. I think that one of the most interesting and informative thing that I have learned today is that no one actually knows which jurisdiction is the best to build DAO products because there is no fine line in how to organize your legal entity and what is the best way to sort of function. So that's interesting that we're gonna be celebrating the Bitcoin white paper anniversary, October 31st. So we're going to celebrate 11 years of the white paper, but at the same time, 11 years after, we still do not have any legal clarity, and we might be subject to legal activities. So that's a very, I think, very interesting point. The other interesting point, that a lot of products that are built on, a lot of DeFi products and decentralized exchanges have ups and downs. And for me, it's pretty great to see that the community has different aspects of that it's not all, oh my God, DeFi forever, or oh my God, DeFi is the worst thing that happened. No, I'm actually relieved to see that the community has different views on that, different opinions on that, which means that we're going to build a lot clearer and a lot healthier community in the future. And to your point about the decentralized media, I have been thinking a lot about that, and it depends on what you actually, what you mean by decentralized media. Do you mean that they're not going to be any editors or people deciding on what to publish and what to write about? If so, then it's just the technology that's going to sort of parcel all the data available. And I think there is a way to go. We might build that for sure. And it's just, that's such an interesting topic, so I can talk for hours. But if this is something that's going to help us get rid of fake news, or maybe help us bring a lot more clarity, on what we write and why we write about it, then for sure, I'd love to see that. I'd love to try.
I want to welcome everyone being in crypto. It's just is the media you're running, and I will say all the stuff. I will with big honor. I want to say that we have viewers on my dTV channel about we are spreading information about ThinkTank community. I'm mastermind of the community, and we're broadcasting this on the channel as well. Guys, we're waiting for you here in our room for after party. Just have a little bit break, and we're waiting for you here. We don't go away. See you.
Join us for the after party. It's going to be a lot of fun, and we'll see you tomorrow for sure.
Yeah.
I'm working all over the world, different languages.